This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Bloomberg Surveillance. Michael Barr back. Did you see him? I had a Michael Barr sighting.
I saw him, yes, absolutely.
You know,
I didn't think he was coming back. I thought he was just like...
He said, I'm not coming back until the Tigers are 20 games in playing 500 ball. There they are. Michael Barr is back. Lisa Mateo never takes vacation.
No, of course not. Where's she going?
As well. We'll talk to her this weekend. You know, there was an article about Costco in The Economist this weekend. And Lisa was in it.
Moving the needle.
She's moving the needle for our GDP. Speaking of GDP, that's a key essence this week. And Paul, as I said to you in our tease with Nathan Hager, I'm sorry, it's a boom economy, and that's what we're adjusting to.
That's what we're adjusting to. And, you know, right in the middle of earnings, more this week, Tom, Tesla, I'm going to really pay attention to Tesla tomorrow. If you're Elon Musk, I don't know what if you're Dan Ives, who's been supporting the stock forever, he says it's time for Elon Musk to step up and really put up a strong quarter here and guidance and that type of thing. We'll see. Pro
tip, if you're like me and you're like, I don't get it, follow Ed Ludlow out on Twitter. Ed bought a Tesla. Is that right, Bob Bragg?
I think
Ed Ludlow bought a Tesla.
Yeah.
I think so.
Right at the peak of the stock.
And, he bought it. He did. and I bought the shares. He bought the car.
Right.
Maybe he's smarter than I am. But anyways, he's doing a running stream of his experience with a Tesla. It's actually way, way cool. Future's up 25. Lisa's going to do the data check here in a moment. We're on Apple CarPlay. We're on Android Play. I got a nasty note this weekend from a gentleman saying, hey, Android Play is like a huge deal. We're going to really feature Android Play this week. It's a better experience out on Google, along with Apple CarPlay as well. On YouTube, Paul and I are humbled. YouTube, search Bloomberg Podcasts, and it's just really remarkable. The live chat's a lot of fun, smart. There was really a value add. Our songs are taken today, folks. Rock and Roll Hall of Fame.
Yep.
That's what we're doing today. But anyways, it's going to be an interesting week. Bob Michele with us in the 8 o'clock hour. Patrick Armstrong scheduled here in a moment. From the Interactive Brokers Studios with our Bloomberg Business Flash, Lisa Mateo.
Good morning. Yeah, futures advancing as the focus kind of shifts from Middle East tension to company earnings, economic data for clues on where interest rates are headed. Now, on the earnings front, more than half of the Magnificent Seven companies, including Microsoft, Meta, Alphabet, they will be reporting this week. Now, speaking of big tech, UBS cut its view on the big 6 tech stocks. That's Apple, Alphabet, Meta, Microsoft, NVIDIA, to neutral from overweight. Not really affecting the markets right now that much. We have Apple up 0.3%, Alphabet up 0.5%, Meta up nearly 1%. We've got Microsoft up 0.5%. NVIDIA, though, they're up more than 1.5%. Now let's get to the economic data in the U.S. this week. The Commerce Department weighs in with initial estimate for first quarter economic growth. Also this week, we have new home sales, personal income, and personal spending. Over to the bond market, the 2-year yield at 4.99%, up 1 basis point. The 10-year yield at 4.66%, that's up 3 basis points. To commodities, oil and gold both falling right now. Spot gold lower, $2,355 an ounce, and we have Brent crude at $86 a barrel. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. We're going to digress right now. We can do this with Paul Sweeney.
Sure.
I read Lucas Shaw. Went back to Lucas, and I just said outstanding. We can talk about Mark Gurman later, who says iPhone. They got to grow up and get a cheap iPhone out there. But Lucas Shaw has captured. This is a newsletter, folks. Lucas Shaw. I'll put it out and all that. Can't describe how interesting it is. And he says it's just simple. It's a complete crisis of the entertainment business, which is an American business.
It's an American
business.
business.
No other way.
Talk about an export business or an export commodity from the U.S. for generations. That's been media and entertainment across the world. And if you're the media and entertainment business today, you're really at a crossroads because you're trying to figure out, how do I make money in a new distribution world where I do all this streaming stuff? Netflix has shown you can make money, but everybody else is still struggling.
But to finish this, there's no evidence out there as of this weekend when I watched all the episodes of Three Body Problem.
Oh, boy.
There's no evidence that anybody's making any money.
Netflix is making money. Disney says they will make money
this
year. Yeah. Everybody else, we have no idea.
What happened this weekend? Michael McKee announced he will be making money at some point out there. Joining us right now. And frankly, this is the interview of the day, because what is so fascinating in the stew, the bouillabaisse that we have going on here, is once again, all the smart people got nominal GDP wrong. Mike, we're going into combo Fed, combo earnings season, and the rest with a 5% plus nominal GDP. How does the Fed adjust once more to the shock of this buoyant economy?
Well, I tell you, they're not really going to adjust at this point because they don't have to.
They don't have to adjust.
They don't have to adjust. They do in June. When the June Fed meeting comes up, they have to give us their latest forecasts. So that's when you'll see the adjustment. You may see Jay Powell downplay a little bit the idea of rate cuts in his news conference on May 1st, but he's not going to probably put numbers on it at this point. They want to see more data because they don't know exactly what's going on.
Austin Goolsbee on Friday said he wants to see more data.
Well, everybody wants to see more data because they really don't know what's going on. I mean, they're trying to develop theories of why the economy is not slowing.
Can I interrupt, Mike? You've been doing this for years. Mike and I sort of read in different orbits. The thing that's going on here is American might, American exceptionalism, and the American spirit. Ken Griffith's building a skyscraper on Park Avenue. Kansas City's in a complete boom. This is just about America at the end of the day, isn't it?
Everything's up to date in Kansas City. Sorry, I've heard. Yes, it is about American exceptionalism, but why are we exceptional? What is the difference between what's happening here and in Europe and in the UK? I mean, there are things you can point to, but does all of it add up to the kind of growth that we're seeing? And if you could put a label on it or find the segments that are really growing, then maybe you could concentrate on that. But at this point, it's just all kind of, as you said, a bouillabaisse of strength for the United States. Is it the money that we spent before? A lot of people point to the CHIPS Act and the Inflation Reduction Act for federal money, but Brookings does a fiscal impulse monitor, how much fiscal help is being added to the economy, and right now it's at zero. So that doesn't seem to be the explanation either.
A lot of economic data this week, so you're going to be busy, Michael. And on Friday, the PC core deflator year on year, 2.7% annualized, down from 2.8% last period. That's a pretty good inflation number, isn't it?
Yes, it's a pretty good inflation number. And if you'd asked the Fed a few years ago, would you be satisfied with it? They would have said yes. The problem is everybody gets used to the idea that inflation is high, and as we've talked about, people tend to look at the level rather than the change in prices. So it's still not getting the job done, and I think for most people to accept the idea that things are better, they're going to want to see rate cuts, and they're not going to get rate cuts until the Fed moves, until the inflation numbers move even lower.
Where's the productivity zeitgeist right now? This weekend I had a fancy dinner Saturday night with some monkey mucks from England.
Wow.
Yeah, it was, usually I do McDonald's, but it was fancier than that. And I had another thing, and I said at both of those, I've seen something different in New York. This is the month where we've actually left the pandemic. You can just feel it, Mike. Where's productivity fold into this?
Well, there's a lot of fingers crossed among economists and at the Fed that we are seeing a productivity gain that will be sustained. We have seen productivity come up now. You always see productivity rise significantly coming out of recessions, but it has been 2 years, almost 4 years now. And so if that's the case, then will productivity fall back? Or are we on the cusp of something new? And there's a feeling that maybe we will be, not because of AI, that really hasn't penetrated yet, but because it became so hard to find workers that a lot of companies spent money to automate, to become more efficient because they needed to. And so that might mean we have a little bit stronger productivity. And we're also seeing this stronger population growth than we anticipated. So all that drives potential growth higher.
Right. I think that's something the research for the summer is the immigration impact.
Yeah, I agree.
Migrant impact. Okay. Mike, we got to leave it there. We got to move all the chairs. So Michael McKee really giving us the start of the week on the economics, and I'm really glad we did this because, to me, it's all about that GDP number later in the week to see what, and to combine it with inflation into the animal spirit. Mike, you got to get up. Lord Barr needs to sit down.
I will move for Lord Barr, but I would also point out that the Bruins and Celtics won this weekend. So
that's good.
Playoffs are starting well.
That's good. That's great. The Rangers won, and it's fun. And some NBA
Knicks won.
Here. Yeah, the Knicks they pulled it out. I'm just to see the photograph of Knicks Sixers.
Yeah,
I'm in. You got to be.
Yeah,
and it's like when the Tigers play the White Sox. The Tigers are so superior to the White Sox, they only play with 8 guys in the field. Futures up 24 with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, and Lisa. The first ever criminal trial of a former U.S. president begins this morning in New York City. Jurors hear opening statements in Donald Trump's so-called hush money trial. The Manhattan District Attorney will try to convince 12 jurors beyond a reasonable doubt that Trump repeatedly falsified business records to unlawfully influence the 2016 presidential election. Loyola Law School professor Jessica Levinson.
I think the defense is going to focus on the fact that Michael Cohen, likely to be a star witness for the prosecution, has major credibility issues. The defense is also likely to focus on their allegation that the former president lacked intent to commit or conceal any crime.
National Enquirer publisher David Pecker, who was part of an alleged scheme to buy and bury unflattering stories about Trump, is among the early witnesses. The Senate is expected to vote early this week on a package of 4 bills providing aid to Ukraine, Israel, and Taiwan, as well as forcing a sale of the social media app TikTok. The bills passed the House over the weekend, prompting some Republicans to turn against House Speaker Mike Johnson for depending on Democratic support to get the bills through. House Foreign Affairs Chair Republican Michael McKee of Texas talked about why 112 Republican lawmakers voted against the bill.
They bought into this notion that it's an either-or proposition. You can't secure the border. You can't support Ukraine without the border. We can do both. We're a great nation.
Congressman McCall spoke on ABC's This Week, heard Sundays on Bloomberg. 101 Republicans voted in favor of Ukraine funding. Finally, today is Earth Day. According to a new CBS poll, 2 out of 3 Americans think it's their personal responsibility to do something about climate change right now. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Unfortunately, I can remember the first Earth Day. Good morning, Fairport, New York.
That's true.
Yeah,
I remember that.
It was the first Earth Day, and here's what I'd say, Michael. Everybody's got their one Earth Day experience. My family lived on the San Gabriel Mountains in Altadena, California.
Yeah.
And the pollution was absolutely unreal.
Right.
And now you can see the mountains.
Yep.
I'm sorry, LA is a completely different place than my childhood.
Yeah. Wow. I go back so far with Earth Day. I remember as a kid, we thought Earth Day, someone challenged me to eat a mud pie. And I'm like, you've got to be kidding. Yeah. And it's like, no, you don't have what Earth Day is all about.
Best part of Earth Day, I think Denny McLean was on the mound the day afterwards. Yeah. Stay with us. On Earth Day, we welcome all of you to Bloomberg Surveillance on Apple CarPlay, Android Play, and YouTube.
and we get right into the full ban. But that's very much
Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are advancing as a focus shifts to earnings from geopolitical tensions. S&P futures right now, they're up about 0.5%. S&P, that gauge actually recorded its worst week since March of 2023, so we're keeping an eye on that. Dow futures up 0.5% as well. NASDAQ futures up 0.6%. Over to the bond market, the 2-year yield at 4.99%, up 1 basis point. The 10-year yield at 4.66%, and that's up 3 basis points. Over to commodities, we have spot gold lower at $2,347 an ounce. Brent crude at $86 a barrel. Companies making news. We'll start with software giant Salesforce, up more than 3%. Now, sources are saying its takeover talks with Informatica have cooled, but both parties just struggling to agree to terms. Informatica right now, they're down more than 6%. And Tesla, they're lower. They're down more than 3%. This is ahead of its earnings report. The company spent the weekend cutting prices of its models across China, Europe, the U.S. It's also lowering the price of its full self-driving software by 1/3 in the U.S. And finally, Honda. ADR's little change, but it says plans to sign a multi-billion-dollar commitment to build new EV facilities in Canada. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. Greatly appreciated. Lisa Mateo there. Paul Sweeney and Tom Keene getting the week started. And what's so cool about Critic Group is, she went over to England.
I know.
Can you hear she's getting a British accent?
Yep, I know.
Can you hear it?
Yep.
It really works. It's like a Texas British accent. It's just absolute. It's just completely unfair. And you say there, Critic Group, and it's all that. And usually you can find her in the foyer or the reading room over at Claridge's, but instead she's like keeping pace with U.S. government work. And Critic joins us right now on the madness in Washington. Critic, I guess there's an aid package. Fine. But the topic Monday morning here in America is the future of the Speaker of the House. Is he done?
He could be done. I think he's bought himself a little bit of a lifeline, and that seems to be the consensus in Washington at the moment, because he's coming off, yes, an aid package, but a $95 billion aid package that has bipartisan support. Yes, he is still dealing with kind of this right-wing offshoot within his own party, and we know the Republican Party has been quite unstable for a while, to say the least. But one of the reasons that he's actually won a little bit of a favor is because of a tiny piece of the Ukrainian aid that actually was proposed by President Trump himself, the former president, of course, of the United States, talking about actual loans, forgiveness of loans. The fact he's able to include that has bought him a little bit of goodwill.
But the heart of the matter is this aid package had nothing on the border. And Paul, help me here. I would suggest all Americans are riveted, in whatever their opinion is, by the border. Why, Critic, in your reading on this, why was it border free?
It feels like it came as a trade-off with some of the China story in particular, because remember, it is aid on the surface, but attached to this bill is a TikTok divestiture, and that's where he's won a little bit of support here, because the right part is far more tough on China than Biden and his administration has been, although they have also been equally tough. This, of course, comes ahead Blinken and China on Friday, but I think it's because of that divestiture that's been basically forced into law and due expected to make onto Biden's desk on Thursday, I believe. That's also won him some goodwill. But the border story has been kind of locked for a very long time. And that's why people are saying he's not in the all clear just yet, because, of course, they're going to come back. But for now, given that aid to Ukraine, he's able to hold on to his job for at least this week, Tom.
So, Critic, unlike Tom and Lisa, I'm not a big TikTok person here. What's going to happen to TikTok? Because, I mean, this is really interwoven into everybody's everyday life, it seems like.
Well, there's two narratives here, and I'm going to quote my former co-anchor Tom McKenzie, who actually was sitting right behind me for our YouTube watchers. He actually said this is a China hard line this morning. He's making the point that he's not really sure who gives in this situation. But of course, in the States, it's very clear it has to be a divestiture. From a market standpoint, though, from a millennial Gen Z perspective, if I can offer that, is there's a question of whether or not this eats into the likes of Meta, Snapchat, Alphabet, etc. But for TikTok users, other than myself, you'll know that if you use Instagram or YouTube, for example, the TikTok videos come onto that. So right now, the question in terms of market impact is, does it eat into social media names in the States, or does it give it a tailwind?
And look, Critty, one more question here to get you on your day. I'm absolutely fascinated by what you're observing in London, working with Guy Johnson and Anna Edwards here of the Conservative Party. Is just the basic tone day to day in the markets today, morning grind in London, that the Conservative Party is done?
The Conservative Party in the UK? The
Yes,
Conservative Party in the States?
Conservative Party in the United Kingdom. I'm sorry.
Yeah, that does seem to be the consensus there, that the Labour Party is going to have some sort of landfall victory in the fall, and that's why this election is getting pushed further and further back. But it's kind of the same narrative, though. What possible little things can be done to kind of make some sort of progress with the electorate here? Housing, of course, is a big one. How quickly can that be made? The BOE getting a lot of flack for keeping rates higher for longer. That rate cut as well expected to help a little bit. But right now, the consensus here is that the Conservatives can't hold on for very long.
Very good. And thank you. Critty, is your life changed? Like when you go into Clara just now, does your life change, Critty Gupta, because Forbes decided you're working so hard that you're 30, what is it, over or under, 30 under 30, 30 under 30. Critty, has your life changed?
My life has not changed, but what I will say, you keep talking about Claridge's. I'm over here sitting at the Ned, keeping the seat warm for Tom Keene.
There we go.
He just still hasn't done that.
Road trip. Critty Gupta, thank you so much. Look for Early Morning
Forbes.
London, really our most important show, getting global Wall Street started off of the city, off of all the work there. Critty Gupta with Bloomberg Markets today. A really important research on what we try to do with surveillance. It's a movable feast. Like, yeah, we're planning. The only one on our team who plans is Rich. I mean, nobody else plans. But all of a sudden, it's rip up the script. Slock of Apollo. There are simply no signs of a slowdown in corporate earnings. The economy continues to power ahead. That, to me, is the zeitgeist as we enter the week.
Yeah, exactly. I mean, he's pointing out that equity analysts continue to increase their earnings expectation for the S&P 500. So just kind of going higher. So that kind of suggests that the valuation risk in the market may be a little bit less than some folks thought, because simply the companies are putting up some pretty solid numbers right here. So maybe it is not just the Federal Reserve, and what's the next move in the Fed going to be?
It's not only, the numbers down the income statement. I'm going to go back to revenue. I mean, there was an assumption months ago, like a given industrial, the name doesn't matter, that organic revenue growth that was 7 or 8% would now be 4%.
Yeah.
To me, that's the great mystery into earnings season. Slack. I mean, he's
pretty good.
He's got the 12-month forward earnings per share, and he's modeling out 250. Everybody's got their own opinion on that. The best leadership we've had is Cheetah Martin Adams.
Yeah. And
she's just adamant. She's been way out front on this.
Yeah. I mean, she was saying, hey, the street set for earnings growth 1 year out of 11-12%. She thinks it could be 15% plus, and driven by revenue. And she's been the one calling out the margin improvement story for the last 2 years. And now she's kind of modifying that a little bit and say, hey, now we can take a look at the top line revenue as being a driver here for earnings.
Why aren't there many earnings on Monday?
What's that?
What is it? You guys work like a 3-day work
Yeah,
week?
exactly. Yeah, no earnings on Monday.
Nobody really starts till 6
a.m.
a.m.
Everybody's on Thursday, maybe a little Wednesday.
But Tesla again, coming up tomorrow.
Tesla tomorrow after the close.
Yeah.
Some of the bulls out there like Dan Ives are saying this is time for Elon Musk to step up and put out a cogent argument for growth and profitability.
I'm seeing more Teslas like Uber and Lyft and all that.
I rode in one today coming into, I just can't figure out how to open the door. Like the door handle, getting in the car. I don't know how to do it.
I'm not happy.
I don't know. So
I'm not happy with them. I don't fit in them.
Yeah, I don't know. Mine was, I'm not 6'5", but I mean, it was comfortable for me today.
Yeah, my driver came too with the same thing. I couldn't figure out how to open the door.
All right, so it's not just me.
It's not just
it's Lisa
you.
Mateo.
No,
okay,
yes,
very good.
It's okay.
But it got us here, and it was quiet.
It did.
Efficient.
It was a nice, smooth ride.
Yeah,
gotta say.
Yeah, coming up with the turnpike.
Okay.
So
we okay, Rich?
Yeah, he's
it's
fine.
Monday. We're getting it going. We're like.
Tom, we got some green on the screen here to start the week. That's a nice way to start the week, because that was a rough week last week. Now we got the S&P up 0.5%. We got the Nasdaq up 0.6%. So we'll see how it plays out here. Yields 10-year Treasury up a little bit, 4.65% on your 10-year Treasury. We're going to have more coming up. This is the Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are advancing. We have S&P, Dow, and NASDAQ futures all up about 0.5%. And this is reporting season kicks into high gear this week. Results from big tech giants, Microsoft, Meta Platforms, Alphabet. Investors, they're going to be looking to see whether they live up to that high expectation set for artificial intelligence. We shall see. Right now, Microsoft and Meta, they're up 1%, Alphabet up 0.5%. Now, as far as earnings today, coming from Verizon, their shares up more than 2%, beat analyst estimates for profit while boosting wireless service revenue, even as it lost more retail phone customers than it expected. Over to the bond market, the 2-year yield at 4.99%. That's little change. The 10-year yield at 4.66%, and that's up 3 basis points. And finally, commodities, we have spot gold lower at $2,342 an ounce, and Brent crude $86 a barrel, NYMEX crude $83 a barrel. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. Greatly appreciate it, Lisa. Mateo. So I'm looking at the Dow. I know I'm supposed to look at the Standard & Poor's 500, but Paul, I'm just doing this to aggravate John Farrell. But the answer is the Dow Jones Industrial Average, doing better than SPX right now, is down, like next to nothing, 4%. It's a drawdown
That's
of 4%.
That's a drawdown, that's what the kids say.
Major drawdown. The 200, my long-term moving average, it's not a 200-day, but it's pretty close. I use something different, is down 6.7%. So my support level is not even a true correction.
No.
That's the trend up that we've seen here.
Yep.
And this drawdown gets us back to some point like the third week of January when Paul Sweeney was like 8 days in Vail or whatever he was doing. It's a boom economy. Simona Mocuta joins us now with State Street, their chief economist, really twisted economics. Love her work. Simona, just as simple as I can, it's a boom economy, isn't it?
I wouldn't go as far as calling it a boom economy. I know there's a lot of, enthusiasm at the moment, given the string of solid data that we've received. But I think we are not really talking here about the reacceleration. It is a soft landing that continues to be a soft landing. We are doing okay, but it's hard to really, in my mind at least, as I look at the data, to pinpoint the sources of reacceleration. There are parts of the economy, like the industrial, even globally speaking, industrial complex, where you see a bottoming out process, and probably there we are turning higher. There are parts of the U.S. economy, such as housing, where the worst is over. We had the recession there, it's over. But it's hard to tell, to speak of a sustained reacceleration in consumer spending.
Right.
And that, to me, is what makes the difference.
Well, do we want a reacceleration of, let's say, 2.5% GDP plus 3% inflation?
Yep.
Maybe 2.5% inflation. That's 5% nominal GDP. I don't think anybody out there wants a reacceleration.
No, let's talk about inflation, Simona. This inflation we've seen over the past couple of 3 months, is that a blip, as economists might say, or is that something more?
Well, I think that's a lot of debate going on, and everybody is now shifting towards this is more than a blip. I was joking with my colleagues a little while ago that, when you drive on the road, there is a speed bump and occasionally there is a speed table. It seems to me like this is a speed table. But I think what's important to highlight is that the breadth of these surprises is not the same that we had back in 2022 and 2023, right? There are certain areas here in the CPI, PC, whatever measure you look at it, that in some sense are still a retroactive adjustment to what had transpired previously, right? Insurance, repair cost, all of these reflect the rising cost of underlying assets, but it's a bit of a catch-up correction. It's not, the same sort of genuine, broad-based resurgence in inflation. So I'm more of a, temporary blip than true second wave camp here.
So if that's in fact the case, Simona, more of a blip than a second wave, does that suggest that this Federal Reserve can move ahead with rate cuts, or do you think they'll kind of stand pat?
So I think there is room for them to recognize and respond to the progress on inflation that's already been accomplished. There is a lot of, a lot of cuts have been taken off the table. There is conversations around maybe the next move is not even a cut, but a hike. I don't agree with that viewpoint. I think there is something to be said about being cautious, but there is something to be said also about recognizing you're in a far different and better place on inflation than you were 6, 12 months ago. So I think, a cut now in the very near term is a bit of a risky proposition unless we have some evidence that maybe this employment growth is not sustained at this level. We've had we started the year with incredible numbers on payroll growth, but we are not creating the same kind of jobs today that we did before, much more part-time with less income associated with those jobs. So, even real personal disposable income up only 1.7% year on year. That is the sort of number that would tell you, well, what sustains a prolonged inflation.
Well, Simona, on the labor front, I guess the discussion over the last, month or so has kind of switched to saying, hey, how do we factor in this increased immigration we've seen over the past couple of years, how's that factoring into the labor data? How do you guys think about that?
Simona, I think Sweeney's like 3 months ahead of the debate there. Just so you know, I think this is like the August debate.
Well, no, I think this question on how you incorporate immigration flows and where do you see it in the economy, in the labor market, what's the counterfactual on consumer spending if you didn't have the immigration inflow, where would you be? I think those are all the things that we are struggling with right now. I would say first and foremost, you see it in diminished wage pressures. But, at the end of the day, that is the indicator that, frankly, the Fed should focus on the most, because when they talk about inflation and they worry about inflation in services being sticky, remember, the argument was always it's because wage pressures remain elevated. I don't see elevated wage pressures even in the service industries anymore. And so that's why I go back,
Right.
like the reason you see inflation today is different and not so much under the Fed's control. But do we also want to say that we can sustain 300,000 or 250,000 employment
No,
growth
we don't.
indefinitely
No.
because of immigration? I doubt it.
Right.
Where
Okay,
we
so-
hire, right? Where we hire right now, it's education and healthcare that you don't get a lot of healthcare.
Okay, I
Where you
agree
do
with that.
get
But
help is-
Simona, to your wage point, and we got to go. The wage point, we had a trend here of 2% ECI, wages and benefits growth. And then maybe we bubbled up to 3%-ish, 2.8% growth. And then I get it. With the stimulus, we boomed. We doubled that to 5% ECI year-over-year growth. We've come back. But on a trend basis, Simona, we have quarters and quarters to get back to a normal trend ECI, wages and benefits all in. Are you suggesting we're going to see a plunge in wage growth?
I think you've already seen a substantial correction in wage growth. You're right that the employment cost index is still above 4%. But if I look out a year from now, it's going to be, in my mind, somewhere in the low 3%. And that, in the context of some productivity gains, I think is perfectly aligned with getting
Right.
back to the inflation target.
Simona,
So it's when do you take the snapshot, I guess, is the question.
Okay, Simona, great brief. Simona Mocuta, thank you so much. She's with State Street Global Advisor. She really captures, Paul, some of the tension there. And the answer is most of the market economists are way more gloomy than the numbers I'm seeing on. I'm sorry, right now I got ECI. Let's say it's 4% or 3.8% year-over-year growth in wages and benefits.
Yep.
5 years ago, that was a nirvana number.
Exactly,
That was like
exactly.
an unheard of number.
Exactly. So we've got wage growth. It is moderating, and you have to get a sense of kind of what impact the immigration, legal and illegal immigration, is impacting that wage number. But
Right.
again, still ahead of inflation. So real wage is still in decent shape, I think, for most Americans
Right.
out there. So, but we'll get a lot of that data coming in this week. And again, that inflation reading on Friday, Tom, the PC deflator.
18.26 on the VIX. Come in a little bit with a better tape. Futures up 29 off the carnage last week. Dow futures up 222. With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. A jury in Manhattan will hear opening statements this morning in former President Donald Trump's criminal trial. Trump is accused of falsifying business records to conceal a hush money deal with an adult film actress ahead of the 2016 election. Elaine Saunders is a political science professor at St. Peter's University.
The trial actually begins. First, there will be opening statements, and then, of course, we'll have the witnesses. We won't be in the realm of speculation anymore. We'll be in the realm of what is actually happening.
Meanwhile, the Wall Street Journal reports the $175 million bond that Donald Trump obtained to protect his assets while he appeals a New York civil fraud judgment will get a closer inspection in court today. It comes after State Attorney General Letitia James voiced concerns. $61 billion worth of U.S. aid will soon head to Ukraine. Understandably, a grateful President Zelensky through a translator on NBC's Meet the Press.
Now we have all the chance to stabilize the situation and to overtake the initiative.
Meet the Press can be heard Sundays on Bloomberg. Kremlin spokesman Dmitry Peskov calls the approval expected and predictable. Meanwhile, a third Republican joined the effort to remove House Speaker Mike Johnson from his post, making it more likely that Democrats will have to save him if it comes to a vote. Bloomberg's Amy Morris reports from Washington.
Republican Representative Paul Gosar is signing on to the motion to vacate against Johnson after the House advanced a foreign aid package with more Democratic votes than Republican support. A number of right-wing hardliners have lashed out at Johnson for omitting border security provisions from that foreign aid package. Gosar joins Republicans Marjorie Taylor Greene, who introduced the measure, and Thomas Massie, who suggested the motion is not likely to be forced to a vote. They'd rather Johnson resign. Democrats suggest if the motion does come to a vote, they'll save Johnson. In Washington, Amy Morris, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom Pauly.
Michael Barr, thanks so much. 7:41 Wall Street time. And Paul Sweeney knows this is when, through the weekend and launching for Global Wall Street today on the Bloomberg terminal, Bloomberg Intelligence puts out notes. And eagerly awaited is Robert Schiffman, who looks at the credit structure, the debt structure, and the underlying performance of the technology stocks, folks, that you own. And I'm sorry, my head is spinning over the tech gloom, like the UBS markdowns today, and what I'm seeing from Robert Schiffman, who just makes it credit quality performance, keys to success, considerable free cash generation.
Yeah.
I mean, it's all there is to it. You know, he's looking at this one sentence down the curve. Double B rated Uber may soon be supportive of rising star status, while AI leader NVIDIA has further upside as cash flow booms. God, I feel gloomy. I mean, Schiffman's going completely the other way from the equity world.
Yeah, I'm looking at just some of his recent research. He's talking about tech issuance is small relative to other sectors. They've only had about $37 billion of issuance year to date. But with signs of recovery, we may see a sharp rise in 2024 tech issuance to the point where new tech bonds for 2024 exceeds $40 billion of the maturities that are coming due. So he thinks even though the tech companies have been a little bit quiet here in the first half of the year issuing debt, they could step up here in the second half. And it's just, I kind of find it amazing why these tech companies go to the bond market at all, because they have such tremendous free cash flow. They're relatively under-levered. But as Rob has pointed out to us in the past, they come to the market because they can.
The smartest thing I've heard is from Paul Sweeney. Can they just do a 1% dividend and act like adults?
No.
Can you imagine these companies with a 1% dividend? Where would the 5-year dividend growth rate be?
Yeah.
Double digit?
Exactly. I mean, look at it. My favorite one is Apple. Apple Computer, no dividend yield to speak of.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are advancing. We have S&P, Dow, and NASDAQ futures all up 0.6%. Over to the bond market, the 2-year yield at 4.99%. That's little change. The 10-year yield at 4.66%, and that's up 3 basis points. Checking in with commodities, we have spot gold lower at $2,344 an ounce, and oil, Brent crude at $86 a barrel, NYMEX crude at $83 a barrel. Few companies making news. Clothing retailer Express filed for bankruptcy. The company received an offer from brand manager WHP Global, mall landlord Simon Property Group, and Brookfield Properties to buy the operations and most of its stores. Then you have insurance giant Chubb. They're expanding beyond just auto, property, and other coverage. They're purchasing the pet insurance company Healthy Paws. And finally, the Financial Times reporting New York Stock Exchange polling market participants about trading stock around the clock. It's been a hot topic recently, the 24/7 operation of cryptocurrency trading, also the rise in retail investor activity. That will certainly keep us busy. That is your Bloomberg Business Flash. Tom and Paul.
Okay, we're going to do this now. Alex Steele is out this week. Paul Sweeney at 10 a.m. is going to have team coverage of this. Paul, what in God's name is Bitcoin having?
My understanding is, it is the supply of Bitcoin that is added every period will be halved, cut in half. So yes, there'll be more supply, but it'll be less supply than over the prior period, which goes to the notion of
halving. It's not the price is halved.
No,
it's not trading at 30,000 today.
As you mine more Bitcoin, the amount of Bitcoin that will result from your mining efforts will be half. 50% of what it was.
So
the prior period.
It's less supply, and this is where we get the story.
Yes.
This is driving to 100,000.
That's the call. And again, I'm just quoting Mike McGlone, my go-to guy, Bloomberg Intelligence, on all things Bitcoin. Kind of puts a limit-ish on the supply, and if you think demand is going up, then there's your
They're out on
case.
YouTube saying, Tom, put the surveillance cork in your mouth. You're right, out on live chat on YouTube. I really don't want to. Patrick, the rewards for mining a Bitcoin block, a block is a set of transactions. Okay.
Yeah, I'll go with that.
Got that right.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front page is Bitcoin free. It's brought to you by Interactive Brokers Bond Marketplace. Access our vast selection of over 1 million global fixed income securities, no markups or built-in spreads, with low, transparent commissions. Learn more at ibkr.com/bonds. We thank Interactive Brokers for their support. Yeah. Lisa, all-nighter Sunday night, getting ready for the newspapers. What do you got?
I need another cup of coffee now. That's what I need. We're starting with the Wall Street Journal. They have this interesting look about how diversity goals, they're starting to disappear from companies' annual reports. So they did this analysis of 10K filings to the SEC. Now, some companies shortened descriptions, removed entire sections. Others changed a few words, phrases to cut out mentions of race, specific hiring. But it comes, as a lot of legal, political threats after affirmative action decision. So these are some of the changes. Kohl's, no longer says it's cultivating, quote, diverse leaders. It now says it's just leaders. So those are just some of the things. But analysts are telling the Journal that there's this kind of reevaluation in the level of political risk that these companies are willing to take now. So now you're starting to see a difference from a few years ago.
And I would say the catalyst, Paul, for this was money. I think it started with Hollywood, where different Hollywood entities added up actual screen failures from somewhat of a diversity thrust led by Disney. And one number I saw in Variety was $1 billion of losses on projects that were spurred forward by diversity. And now it's come over to other industries.
Yeah, I've seen written in a variety of media over the last 6 months kind of phrases of peak DEI, peak wokeness. Have we passed the peaks in those types of things? I don't know. But again, here's something from the Wall Street Journal talking about diversity in annual reports.
One thing I'd say, at least, is I had a shtick going years ago where I'd interview a CEO. Usually they don't want to come on with me because, I ask real questions. And, I would put up their annual report from 3 or 5 years ago which read like it was in Sanskrit, because there's always a vote. To be fair to everybody doing the hard work of diversity, there's always something in. And 2 or 3 years later, you look back and you go, did I really write that, or did my team really write that? That's why one reason I think James Diamond's 62-page epistle is actually valuable, because he's not writing a PR structured MD&A, but it's fascinating to see where this is 12 months from now. So what else do you?
Yeah, it keeps changing. Okay, this is about more Americans wanting to go on vacation, right? Vacation season, but they're willing to go in debt in order to go on vacation. This is a Bankrate survey. A little more than half say they're planning the summer vacation 2024, but of those, 1 in 3 say they are willing to go in debt. Put it on a credit card. Wow. They're willing to buy now, pay later, borrow from family, friends to go on vacation, even taking out personal loans in order just to get that vacation.
There's a thing called Uplift, which is the buy now, pay later for airplane tickets. And that's changed the world.
Oh, game
and what I see there is people that would fly economy doing that buy now, pay later and buying premium economy. Or people that would buy premium economy, buy now, pay later, slide into business class. And to me, that's been a profound, it's one vehicle of what you're talking about here.
Well, we've heard from all like the cruise companies that they're fully booked and they're booking into next year, and bookings are great, and same thing for the hotels, but
how people are paying for it.
Rich, help me out here. This is important.
Where's he going?
Rich is our surveillance cruise reporter.
Oh, really?
He's been there's no cruise. He's even done the Alaska polar bear thing, like with Abramovich. 11 cruises. Are they booming? Are they booming? They're booming. Like you got to race to get a booking. Where's your next cruise, Rich?
Gosh.
He's going to Yugoslavia. Dubrovnik. Can you see Rich? Folks, he's probably taken Ken Fellio, our global technical director. Can you see Rich Sherman at the parapet of the Game of Thrones castle in Dubrovnik, looking out, looking for the damn dragons? I can see it now. Next.
He's at the buffet on the ship.
Yeah. Okay, so we've been talking about Apple relying on China and the iPhone for growth.
Big deal.
Yeah, so Apple, what Bloomberg is saying, this is a really interesting report, that they need to explore new ways to get back on track, like a lower grade iPhone, maybe in the $250 range. Don't know if that's possible, but the article really gets into how, different ways Apple can go about doing that. But it's really been trying. I mean, they've been trying to put out, all-in-one services, a lot of accessories. That hasn't worked. They tried to put out a cheaper iPhone, didn't really pick up too much. But Bloomberg is saying this is that target. They need to hit that $250
Well, I mean, this is reporting by Mark Gurman, so nobody knows Apple better than Mark Gurman. But I've always kind of said, if they keep saying they point out India as a market for growth, given that maybe they want to pivot away from China. But if you want to be a player in India, don't you have to have a lower cost phone to appeal to that market? Yet,
can you make the profit Apple is addicted to?
You're right.
I don't have in front of me those ratios, but the amount of money Apple makes per phone versus Samsung is shocking. It's a shocking delta.
You're right. They focus on margin.
You got one more today?
I do. Okay, so more workers, or should I say some workers, they swear that ketamine, other psychedelics, can boost creativity and focus on the job. I mean, we saw it. Elon Musk says he takes it to boost his mental health. But the thing that's pushing is because it's becoming legal in some areas, like Oregon, Colorado. So it's lessening that negative feel that people have. Yes, ketamine and psychedelics. So
we call that LSD in another time.
Okay, you
listen to Disraeli Gears, and not that I know anything about that.
But no, of course not. But the FDA says they say ketamine is not good for mental health treatment. They don't recommend it.
Psychedelics are beginning to find some adherents beyond Silicon Valley who say the drugs make them better at their jobs by expanding imaginations or taming doubts about their abilities, though supporting research is limited. Go figure.
Yeah.
And this is from the Wall Street Journal.
And it is. So we'll see if it kind of picks up. But
ketamines.
More workers are kind of getting behind it and hopping on the train. We'll see.
Okay. Well, thank you, Lisa. That was, newspapers. Lisa Mateo with our newspapers.
And Tom, we were talking about the cruise business. Cruise operator Viking sets price range for a $1.1 billion IPO. That's per our cruising analyst, Rich Sherman, all over.
Rock and Roll Hall of Fame. We're going to do 2 from the Hall of Fame and one that, darn it, they should be in it. Finally, Lou Gramm. And Foreigner, Lou Gramm, in the Rock and Roll Hall of Fame. Yes.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in that fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene, Bloomberg Surveillance, Lisa Mateo. Michael Barr, Lord Barr is back with us here after a sojourn. He has been off a really important hour for Global Wall Street for the entire half hour. Bob Michele joins us from J.P. Morgan with a real brief on the oddity of what rates tell us right now about this boom American economy. We're going to get right to it. Futures lift off the carnage of the last number of days. Futures up 28, Dow futures up 226. The VIX comes in 18.25. Bloomberg Surveillance this morning, brought to you by Cohn-Resnick Advisory Assurance Tax. Cohn-Resnick's Enterprise Risk Management Solutions can help your company drive value through stronger compliance and reporting procedures. Visit Cohn-Resnick.com. Thank you, Cohn-Resnick, for your support this morning. Really interesting reset for the week. Paul, you mentioned it. Later in the week, the PCE statistic, which is, I guess, a big deal.
That's what they tell me. I mean, the inflation here for the Federal Reserve, it's been a little bit stickier. We've had a little pickup, a resurgence, if you will, in January, February. The question is it a blip or something more?
We've had a resurgence as well. On YouTube, search Bloomberg Podcasts. There's a live chat, which I hope will be very active here on what we hear from Bob Michele of J.P. Morgan, out on Apple CarPlay, Android Play as well. It's a new digital distribution, the new Bloomberg Podcast distribution. Just had a huge response globally and across the nation on YouTube. Right now, with our Bloomberg Business Flash, Lisa Mateo.
Good morning. Yes, and futures advancing. The focus shifting from Middle East tension to company earnings, economic data for clues on where interest rates are headed. On the earnings front, more than half of the Magnificent Seven companies, including Microsoft, Meta Platforms, Alphabet, will be reporting this week. Now, speaking of big tech, UBS cut its view on the, quote, big six tech stocks, that's Apple, Alphabet, Meta, Microsoft, NVIDIA, to neutral from overweight. Now, we want to check in with a few of them because it's not having much of an impact right now. Apple, Alphabet, Meta, they're all up about 0.5%. Microsoft, little change. NVIDIA up nearly 1%. Getting to that economic data, the U.S. this week, the Commerce Department weighs in initial estimate of first quarter economic growth. Also this week, new home sales, personal income, personal spending. So we have NASDAQ futures up 0.5%. Same with Dow and S&P futures. The 2-year yield at 4.99%. That's little change. The 10-year yield at 4.66%, and that's up 3 basis points. To commodities, spot gold lower, 2,338 an ounce, and Brent crude at $86 a barrel. That is your Bloomberg Business Flash. Tom and Paul.
And of course, we try to do all the research we can on all of our guests. Here is Bob Michele in his morning call at J.P. Morgan.
Few teapottigegene thrasymachus.
Great.
I think it was.
Am I buying them or am I selling them?
Amy Wu Silverman at RBC just emailed in and said, yes, Tom, that was Greek. Joining us now, the one that puts Greek and Latin into our bond coverage, Robert Michele, Bob Michele of J.P. Morgan. How do the Greeks right now, the derivative Greeks, play into what you do? When you look at the quiet of holes in the market, or a new volatility, maybe it's skew that you play into. How does the derivative space fit in?
They're critical to what we do in the markets. I think so much of what you try to do is in the cash market, but there's limited bandwidth. Broker-dealer balance sheets aren't what they used to be.
Right.
And a lot of the balance sheet in the industry sits with investors like ourselves. And we tend to own securities until we change our mind. So we're not in the market actively trying to change positions. You go into the derivatives market to help you change the positioning of your portfolio or perhaps put a bit of a hedge on.
Is there Bob Michele, and I think of Ian Lingen at BMO Capital, you're saying we're going to see price up, yield down. Is there a bet in the space now, like what you believe, that we will see as a regime lower yields?
Well, it's everywhere. We liken the current environment to 1995. There's one critical difference. When the Fed finished hiking rates from 3% to 6% in 95, the entire yield curve was above the Fed funds rate. Today, we think the Fed is done hiking rates, but the entire yield curve is trading roughly 100 basis points through the Fed funds rate. So that's telling us that the market still believes that the Fed will come in, take pressure off of businesses and households by doing at least a few rate cuts over the next 12 months.
Bob, we're sitting here with the 2-year Treasury almost at 5% here. I don't know. I'm going to park my money right there, and I'm going to feel fine. Is that a bad trade?
It's not a bad trade, but you may feel lonely compared to the money that's sitting in money market funds. You're willing to step out, but what we're looking at is over $6 trillion of assets sitting in money market funds.
Yep.
And they're feeling cozier at somewhere closer to a 5.5% yield. For that money to come out and come into the bond market, we do need to see the Fed begin to cut rates, or at least telegraph that they're thinking about it again and not dropping these hints that maybe rates could go higher.
So what do you think our Fed should do? I mean, the economic data suggests that maybe there's no reason to cut rates. We've got, I don't know, inflation's still out there.
If I were at the Fed, everything looks so good, I would just sit on my hands for the next couple quarters, see what happens into the election, and do nothing. You're looking at over 2 years of unemployment below 4%.
Yep.
I know we get PCE at the end of this week. There's a lot of debate. Is it going to be 2.7 or 2.8 year over year? Is it a 0.25 or 0.27 increase? The reality is 2 something year over year is much lower than the 6.6% year over year it was a couple years ago.
Is a stated system, is there leverage in the system? Is there that animal, I don't want to say animal spirit, that ancient animal instinct to leverage up when we're certain we know what we're doing? Is there that bet right now?
You're not seeing it to the extent that we saw it previously, either headed into the dot-com bubble in 2000 or certainly into the great financial crisis in 2007, 2008. But there is a lot of borrowing going on out there. The most levered balance sheet are not businesses and household, they're actually federal governments globally. When you look about the extension of credit into the system, bank balance sheets may have shrunk, but private credit is out there.
But the heart of the matter, going back to Rogoff and Reinhardt, this time is different, is they took within their iconic study of debt that it's about public and private combination of debt. Would you suggest we're going to see a private debt issuance and build up in belief in debt? So we've got both public and private over-indebtedness?
It doesn't feel like we're heading there.
I agree.
Right now. It feels like, and I know you did a story, that consumers are looking to do a bit more vacationing, and a third of them are willing to put that, willing to go on into debt to do that. Going into the financial crisis, 120% of them would have been willing to have gone into debt to go on vacation. So there is some moderation. You look at housing, consumers aren't chasing housing prices higher.
Well, let's listen to our Latin tour guide here as we go to Rome. Greek?
Arma virumque cano Troiae qui primus aboris.
That's great. Yeah. And that's like Lisa Mateo scheduled to go to Rome here. She's going deep into debt to go to loan so she can catch up with Bob Michele on the Latin that's
perfect.
That's out there as well. It's going to happen.
Bob, what do I do here? And if I want to take some credit risk here, do I stay with investment grade? Do I go to high yield? Because high yield was the performer last year in the fixed income space. Where do I go in the credit space?
You hope that over the next week, high yield pulls back a little bit further, and then you go in. Without recession on the horizon, you have nothing to fear but yourself if you stay out of the high yield market. You're picking up now yields of over 8%.
Wow.
Corporate profitability looks good. It's a much cleaner high yield market than anything in my lifetime. 6% of it washed away back in 2020.
We're going to come back with Bob Michele at JP Morgan. You link in like Torsten Slack this morning at Apollo with Bob Michele at JP Morgan. And this is my whole theme today. I'm just sorry, folks. It's not that bad out there. Coming up, Paul Sweeney and I are going to tour and look at the view from Bob Michele's office at their new tower.
Oh, I can't.
He's going to be able to look.
Awesome.
He's going to look south and wave to Ken Griffith at his new tower. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, and Lisa. Opening statements begin today in the Manhattan criminal hush money trial of former President Donald Trump. Bloomberg's Laura Davison reports from Washington about Trump's 2024 campaign trail.
Trump has to be in court Monday, Tuesday, Thursday, Friday of every week for the next 6 to 7, 8 weeks. There is a jury now, and so now they can move on in the actual substance of the campaign. But Trump has been adapting it for him. He's been making Manhattan his courtroom, doing things like campaign stops at a Manhattan bodega. We'll see if he does that again this week.
Bloomberg's Laura Davison in Washington. The head of Israel's military intelligence has resigned over the failure to prevent the Hamas attack that sparked the war in Gaza. Bloomberg's Henry Mayer has the details from our newsroom in Tel Aviv.
The announcement came this morning from the Israeli military, and it said that the head of military intelligence, Aharon Haliva, who's been in his job for about 2.5 years, had stepped down at his own request to take responsibility for the failure in preventing the October 7th attacks on Israel by Hamas.
Bloomberg's Henry Mayer reports Haliva is the first senior Israeli official to resign over the intelligence failure. Protests have been growing in recent weeks, calling on Prime Minister Benjamin Netanyahu to step down as well. A person has been taken into custody after allegedly breaking into the home of Los Angeles Mayor Karen Bass. Police say it happened early Sunday morning. Police say the unidentified suspect smashed one of the home's windows to gain entry before being taken into custody without further incident. LAPD Lieutenant James Milonakis.
It's the mayor of the city, and we're concerned that any resident that has somebody just come into their home. So we treat this very seriously.
The mayor's office says she was at home and was uninjured. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. In honor of Bob Michele being here, he's going to come back with us as well.
Good.
And, this was in J.P. Morgan that told me to get into the 97-year Austria piece at 130.
How's that working for you?
It's worked out great. Talk about leveled out. It's at 42.
Oh.
It's gone 130 to 42. But the real issue, it's been at 42 for a year and a half.
But you got some time to.
I got time to come back. I got 50 years to come back. Folks, I can't say this enough. And this goes back to the Standard & Poor's Blue Book. You used to make money or lose money in bonds. Now the whole thing is just clip the coupon.
Yeah, now you can.
But there used to be in honor of Dan Fuss of Loomis Sales or Bob Michele at J.P. Morgan and other bond giants, you could actually we're going to make money at this, or as I did with the Austrian piece, I got hammered.
No, I'm looking at INGO, the Bloomberg Index browser, and I'm looking at my U.S. fixed income business. I'm not making money anywhere here. Right. The closest I am is the high yields, kind of just down about 0.2 of a basis point.
Who's into this S&P Blue Book? Pim Fox. Pim Fox, he'd look at Boise Cascade and Canadian Pacific bonds, and he's always I'm sitting there making 4%, and he's making 20%.
Yeah.
Coupons,
sure, making returns.
It was back when it was just the VOCA, the Great Moderation. Everybody was making money. Now, to say the least, it's sport. That's what we're going to talk to Bob Michele about. Futures up 22. The 2-year yield, 4.99%. That's a wow statistic.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are advancing as the focus shifts to earnings from geopolitical tension. S&P futures right now, they're up about 0.4%, and that's after the gauge recorded its worst week since March of 2023. We also have Dow futures, NASDAQ futures up 0.4%. The 2-year yield at 4.99%, that's little change. The 10-year yield at 4.65%, and that's up 3 basis points. To commodity, spot gold lower at $2,346 an ounce, and Brent crude we have at $86 a barrel. Companies making news, that software giant Salesforce up nearly 3% right now. Sources say its takeover talks with Informatica have cooled down, with both parties actually struggling to agree with terms. Informatica, they're down more than 6% right now. And Tesla, they're down more than 3%. This is ahead of its earnings report tomorrow. The company also spent the weekend slashing prices across its models in China, Europe, and the U.S., also lowering the price of its full self-driving software by a third in the U.S. And Honda, their ADR is little changed, but it's said to be planning to sign a multi-billion-dollar commitment to build new EV facilities in Canada. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. Greatly appreciate that. This morning, Bloomberg Surveillance from New York with futures up 20, the VIX 18.37. We continue with Bob Michele of J.P. Morgan. I guess I got to go to the Fed meeting as well. The basic idea is it's a snooze fest to get to June when they redo the dots. And there's a raging debate now, Craig Torres with great leadership on this over the weekend, about the Fed almost over-communicating. Is your world made more complex because there's too much communication from Fed presidents, governors, and leaders?
You know, Tom, the one dead language that I miss is Fed speak. Remember in the days back in the 80s when the Fed wasn't always telling you every day what you were thinking?
I yearn for it.
You used to get the Fed minutes. You used to get listen to the Humphrey Hawkins testimony. You heard what Greenspan said. Then you got out your secret Fed decoder ring and interpolated what he meant. And there was a value to that. And I think there is just way too much daily information coming
Paul,
from
the most important conversation I've had on this is someone that Bob Michele knows, Richard Berner, who drove the ship at Morgan Stanley for Steve Roach for years in the U.S. economy, public service to the nation at Treasury. And what's so important here is there was just what Mr. Michele says, and then you would go see a president at a Rotary Club or some other economic club, and they'd say just as little at the breakfast as they were saying to us on the street.
Bob, you're head of the global fixed income, currency, and commodities group here. Let's go currencies. Is there a bear case for the U.S. dollar here, or are we just all long the U.S. dollar and letting everybody else deal with it?
There's a bear case for the dollar when the Fed starts cutting rates. Until they do that, there's no sense fighting the strength in the dollar. If you look at when the dollar really started to gain strength, it's when the Fed started hiking the Fed funds rate at the start of 2022. Back then, yen was about 110, not 150. The entire strength in dollar yen has come from the Fed hiking rates, not anything that's happened on the Bank of Japan's part.
So, and we see central banks around the world cutting rates or saying they will cut rates, signaling that they will cut rates. So, I mean, how does the Fed think about the dollar when they think about their rate policy?
You're right. There have been 7,000 basis points of rate cuts in the emerging market central banks. So those central banks have been cutting rates for over a year. And I have to imagine they're starting to second guess whether they need to keep cutting rates here. I don't know that the Fed thinks about the dollar all that much. If we go back, we were just talking about the Fed speak of the 1980s. I remember we used to look at the TAN book, we used to look at the minutes, we used to see how they prioritized inflation, growth, and the dollar. And many times the dollar was their number one priority. I don't think it's their priority right now. I think it's a huge one for the ECB and the Bank of Japan.
Bob, in the time we've got left, I really want to focus here on into the earnings season and corporate issuance. Off of like Zvi Bodhi at Boston University, or there's a thing, folks, called M&M. It's not the candy, but it's a theory here on the allocation of your capital structure to debt. Are we underdebted right now in quality corporate America? Do they have not enough bills, notes, and bonds?
I think we are. We have spent the last quarter trying to poke holes in corporate profitability in the markets and at JP Morgan with our credit research team, and they can't do it. And instead, what they're seeing is a reacceleration in corporate profitability and businesses thinking about investing in CapEx again. It looks pretty bright out there for corporate America. It does remind me of 1995.
Do you suggest bond issuance will be the surprise of the next 18 months?
I don't know. I think there's a shortage of corporate debt right now. We were looking out over the next couple quarters, and there's more money maturing than there are planned
Paul,
issuance.
What you just heard there, folks, is classic John Templeton from Bob Michele. I'm sorry, Paul. I'm in this camp. There's a shortage of bonds. Nobody's looking at the Bob Michele world, and it's a tangible part of how we do this, and it links into the equity market, and there's just a shortage of bonds. That's all there is to it.
I mean, Bob, you're JP Morgan Asset Management. You guys are pretty big. If you wanted to get out of a position, change a big allocation, is there enough liquidity on the street to kind of get that trade done to your liking today versus 10 or 15 years ago? How much harder is it, if at all, to kind of make major trades for you guys?
Right now, when things are relatively stable, you can do it. It will take a little bit of time depending how large a position you're trying to move. There's a lot more in portfolio trading, so hundreds of line items all at once at a single price. That's a feature that didn't exist pre-financial crisis. But when everyone is worried and everyone's pulling back liquidity and their balance sheet, then it is far more challenging than it was pre-financial crisis.
JP Morgan, you say, get that trade done for me, right? I mean, you guys are the players.
You try not to do that because you are reliant on a counterparty. I think that's a pre-financial crisis type attitude.
Let me pin down the 10-year yield 12 months from now. Just a vanilla media call here for animals like me.
I think we're going to be right around 4%.
Down, but not down with the drama that financial media demands.
Not a whole lot. I think the Fed could probably get 100, 125 basis points of rate cuts.
So are you doing cliff notes now on Fed speak? If you got Greek and Latin down from your undergraduate days, Are you looking at Fed speak?
I don't need to do it. They're telling us every 10 minutes what they're thinking. You don't need cliff notes.
Bob Michele, thank you so much. Just generous with his time here on a Monday morning. He, of course, is with JP Morgan. Futures up 21, Dow futures up 188. Our basic theme this morning, Paul and I enthused about what we see off the last number of days, and yet over the weekend the Bears came out, Paul. I was shocked. After a couple tough days, the Bears showed up to tell us how bad things are.
Yeah, 4 or 5% pullback from those peaks, and that was enough to get people a little bit concerned here. It got a little bit of a support here, Tom. The S&P looking up about 0.4%. Same for the Dow, same for the NASDAQ. Let me just call out WTI crude oil off 0.5% here at $82.68. Brent crude 86.42, so kind of off that 90 plus level we saw early last week. So a little bit of a pullback, maybe a little bit of an ease on the geopolitical risk there. So we'll keep an eye on crude.
The currency's stronger this morning. DXY 106.24 really buttressed up against resistance on the chart. A breakout there would be a big deal. And of note, renminbi, the Chinese yuan, goes through 7.23. It's managed. We all know that. 7.24 on the yuan. It's fascinating to see what they do. In the idiosyncratic space, I think I'll go to Turkey, which grinds here at a 32 level today. Mexico through 16. I'm just doing this to impress Bob Michele.
Yeah, I mean, look at Mexican peso, 17 spot 101.
Chit chat, It's great. His Bitcoin halved. I saw Michael looking at that on his screen.
Exactly.
Stay with
He's
us
got the
from
alert
New
set
York
up.
City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures pointing to a higher open, and this as reporting season kicks into high gear this week with results from big tech giants. We're talking Microsoft, Meta, Alphabet. Investors are going to be looking to see whether they live up to those high expectations of artificial intelligence. Right now, we'll check in with a few. We'll check in with Microsoft down 0.2%, Meta up 1%, Alphabet up 0.1%. As far as earnings today, coming from Verizon, their shares up about 2%. Beat analyst estimates for profit, boosted wireless service revenue, even as it lost potential more retail phone customers than expected. Over to the 2-year yield at 4.98%. That's little change. The 10-year yield at 4.64%, and that's up 2 basis points. We have spot gold lower, $2,347 an ounce, and Brent crude at $86 a barrel. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. This is what we like to do best. There's no other way to put it. We like to look at equities, bonds, currencies, commodities, and shift from world class to world class. We do this with Bob Michele of JP Morgan and Bonds. And now one of my favorite people looking at, it's called investment strategy, but far more, it's just equity strategy. Liz Young joins us with an always twisted view from SoFi. Thrilled she could be with us today. Liz, into this earnings season, is the glass half full or less so?
You know what? I think it's half full on expectations, but companies have to come through. And I have to tell you, Tom, I don't think I've ever been called twisted on a Monday morning. So I don't know if that's a good sign for the week. But I think what's going to happen this earnings season, we've already seen it a little bit, especially with the financials, is that it's not just about the results. It's always about the guidance. But I think right now, even more so, especially with where equity valuations are, companies have to come in with guidance, and expectors are expecting the guidance to be stronger even than before. So companies have to come in with strong guidance and optimistic outlook in order to really be rewarded at these levels.
Yeah, but the reason I say twisted, folks, is I got SoFi working off of Anthony Noto with a real digital heritage. It's almost like a West Coast ethos here, unlike 3 zip codes in Midtown Manhattan. And Liz, with that, how does a technology group look? I mean, maybe not individual stock if you don't want to give me a buy, hold, sell on Apple, although we're listening. But the basic idea here, does the tech boom continue?
I think there's 2 things that we need to pay attention to in these results for tech companies. First and foremost, investors should be aware that expectations for S&P earnings growth are positive, marginally, right? Low single digits. And all of that growth is coming from those tech companies, or the expectations are coming from those tech companies. So we need tech to come through on these first quarter results in a positive way in order to carry the index. The other thing that I think is happening, and that is really important to watch, not just this quarter, but for the rest of the year, is that we obviously had all of this AI enthusiasm pull forward. And now we're looking at it through a company lens of, when is it really going to come to fruition? When is it going to actually create profits? And I think some of the enthusiasm and excitement is coming out of that, just as everybody realizes that the profits aren't happening immediately. And there's only really a couple companies that are doing a decent job of generating revenue off of AI right now. So it may just take longer. Doesn't mean the theme is dead, but it may just take longer in order to justify these levels of valuations.
All right, let's talk about valuations. Liz, give us your thoughts about how this market is valued here. Do I pull out the Magnificent Seven and try to look at the market on that basis? Where are we?
Well, given where yields have gone just over the past month, the market right now is valued for a pretty great environment. And when I say pretty great, I mean, we've got fundamentals from an earnings perspective that need to deliver, at least stay this strong or strengthen. And we would also need the economic fundamentals to stay this strong or strengthen. And we would need geopolitical risks to calm down, or at least have the absence of any big shocks. In the last couple of weeks, we obviously have had geopolitical tensions heating up and the likelihood of shocks feeling higher. So the valuations as we see it now, especially given where 10-year yields are, do feel a bit high, even with this recent pullback. So I think we have to really watch how these numbers deliver, how the data delivers. And we've obviously got a big inflation read coming later this week.
Yeah, we do, absolutely, on Friday. And Liz, that kind of goes to, I guess, the Fed. I mean, the market seems to be pricing out, much fewer rate cuts this year. How much is the market being held hostage by rate cuts, or the expectation of rate cuts at the moment?
I think the momentum in the market is absolutely held hostage by what the expectations for rate cuts are. So far, we've digested it pretty well. I know that there's been a correction. It's only a little bit so far. It just feels bigger because our muscle memory is for the market to rise uninhibited. But I think the rate cut mentality is starting to actually affect where markets are trading, but that's more of a rational approach. Some of the relationships that we typically expect from markets, things like yields up, stocks down, that is actually happening again, which feels much more rational to me. And I think investors are taking a hard look at how much am I really willing to pay for forward earnings in an environment where yields may stay high, if not higher, for even longer than we expected.
Bob Michele was there. He's looking for lower rates, but Liz, not much lower rates. There's not much drama from JP Morgan. Price up, yield down. Yeah, we get that. If we get, as you say, higher yields or a new regime a higher yield reset or an R-starred to take it over to economics of 2.5%, 2.6%, dare I say 3.1%. How does that fold into the stock market 3 years out?
Well, I think that's what we're going through right now is this digestion process of, okay, if yields aren't going to come down as dramatically as we thought by the end of this year, when will they come down? Now, what we're looking at is the reason that they're staying higher right now is mostly predicated on the idea that the economy is still strong, which has caused inflation to be perhaps more of a problem for a longer period of time than we'd hoped. So what companies have to do and what stocks will have to react to is that we probably can no longer pass through these inflationary pressures because we've done that already. And there's not a lot of clearance to do much more of it. So companies are going to have to be careful about costs. They're probably going to engage in some cost cutting in order to maintain margins and then get more creative and get more intentional about how they're going to expand their own pie. How are they going to grow revenue without having to pass through costs? And I think that's where we're going to start to see a lot of divergence in these groups that have just blindly benefited from some inflationary rises in revenue.
All right, Liz, what are some sectors that you think, or maybe that you guys are looking at right now going forward for the back half of the year?
Well, there's obviously been a rotation that's been on, and then the rotation's been off. And I think we're going to continue to see some of that volatility as the year progresses. Some sectors that I think will stay durable in those rotations, though, are energy. There has been a huge run in energy since the beginning of the year, so it could stall out a little bit as volatility picks up, and obviously geopolitical tensions will affect that. But energy stocks still seem to be quite attractive to investors, and I think people are not quite positioned yet for those to look all that overbought. And then when you look at things like earlier in the year, I was constructive on healthcare. As we near an election, I would pare back on healthcare. I still do feel good about dividend paying stocks. Those can come from a number of sectors, but dividend payers in an environment where if yields do come down at some point, you want to have that in the portfolio.
When you're talking to Anthony Noto at SoFi with all of his great work on Wall Street, I'm fascinated. Do we need to see tech pay a dividend, Liz Young? This whole idea, we're not going to do a dividend, it's a taxable event, we're only going to do share buybacks. Where are you on that?
Well, dividends are an important piece as a shareholder when you talk about shareholder-friendly companies. But if you're looking, you have to break tech up into a number of different pieces. There are tech companies that have been around for a really long time, very established, maybe in more saturated markets, and the growth is slower because they're not innovating at such a fast clip and they're very large companies. Whereas if you look at smaller companies that are still growing very, very quickly, what you want to hear from those companies as a shareholder is that they're investing in their growth. So I don't think we can paint it with a broad brush. Company like SoFi, smaller, earlier in its life cycle than maybe something really big like IBM that's been around for a long time. So as a shareholder, if you're buying a company with the intention to expect strong growth from it in the future, I'd probably want to hear that they're investing in their growth.
Liz, thank you. Just wonderful. Liz Young, thank you so much. Head of Investment Strategy at SoFi, and I really can't say enough about Bob Michele to Liz Young, excellence there in bonds and in equities. Our economic indicators, Paul Sweeney riveted, I should say, on Friday. I'm looking at GDP on Thursday. And our economic indicators always brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Futures lift up 29. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. A historic day in New York where opening statements will be heard in the first criminal trial of a former president. Donald Trump is accused of falsifying business records to hide an alleged affair ahead of the 2016 presidential election. Meanwhile, there will be a hearing this morning in Trump's civil fraud case in New York. Attorney General Letitia James filed a memorandum of opposition to the company holding Trump's $175 million bond. James's office argues the money is in a bank account and not Knight Specialty Insurance Company as it should be. Former federal prosecutor Lori Levinson.
Trump's bond was actually secured by a California-based insurance company. It's a small insurer that's never been authorized to write business in New York, has never before written a surety bond in New York. So the Attorney General is saying there are many problems with the bond that Trump posted, and he shouldn't be allowed to use it.
Former federal prosecutor Lori Levinson. New York State asked the court to require Trump to come up with a replacement within 7 days of its ruling on the matter. Months of deadlock on aid to Ukraine and Israel are finally broken on Capitol Hill. The $95 billion package is headed to the Senate after a bipartisan series of votes in the House that had Speaker Mike Johnson facing off with hardliners in his own party. A third Republican joined the effort to remove Speaker Johnson from his post, making it more likely that Democrats will have to save him if it comes to a vote. Paul Gosar joined Marjorie Taylor Greene and Thomas Massey. Terry Haynes, founder of Pangea Policy, says he sees Johnson surviving as House Speaker.
Yeah, certainly there's a threat to it. I do think that it's less likely that he ends up getting ousted, though. You know, if I had to put my quarter somewhere, I'd put it on Johnson staying. You know, the vast majority of Republicans want him to stay, and I think that continues.
Terry Haynes, founder of Pangea Policy. Finally, groundbreaking on a $12 billion high-speed passenger rail line between Las Vegas and the Los Angeles area is just about here. The ceremony by Brightline West is set for today in Las Vegas with Transportation Secretary Pete Buttigieg. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
I've never made that drive. Is that going to work?
The drive is great.
Exactly. People want, am I right?
Yeah.
People want to take the drive?
Yeah, but it takes forever to get out of L.A. So by the time you get to the desert, you're like, all right, I've had enough of this. No, I was just thinking, I'm not from that part of the world. I don't know what the demand is out there.
Exactly.
I had a buddy who, I won't mention the name, he's a very close friend, decided he was going to take a year off. Yeah, so few out there. That he was going to take a year off from his job to be a professional gambler. Okay. And he did that commute back and forth driving. And I'm just wondering now, if you had this, would he still be doing that?
Interesting. Well, this is the same company that's building a rail line in Florida from like the Miami Palm Beach area all the way up to Orlando. Right. And there's even talk about it going to Tampa. And we talked to Joe Misek because a lot of it's being financed by municipal bonds. And people are like, this is a speculative bond. Are people going to want to take a train in California, in Florida? Right. I mean, I take a train every day, but it's a different part of the world.
I promise we'll get a guest or two on this. The map is great out on Wikipedia. I mean, you're right into Las Vegas. It drops you off right by, where you can do your sports betting on the Knicks. But I think getting out of L.A. on it is the heart of the matter. Fascinating. I am not up to speed on that. Michael Barr leading the discussion here on themes to look at into 2024. Futures up 30, a round number up 0.6%. NASDAQ up 0.7%. From New York, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are advancing. We have S&P Dow futures up more than 0.5%. Nasdaq futures up 0.6%. To the bond market, the 2-year yield at 4.97%. That's down 1 basis point. The 10-year yield at 4.63%, and that's up 1 basis point. Over to commodities, we have spot gold. That's lower at $2,340 an ounce, and we have Brent crude at $86 a barrel. I want to point out Bitcoin now, 65,881. That's after the latest Bitcoin halving. So I want to check in with other crypto-linked stocks. We have Coinbase are up 2% right now. MicroStrategy up more than 2.5%. Companies making news. It's clothing retailer Express filed for bankruptcy. The company received an offer from WHP Global, Simon Property Group, and Brookfield Properties. And finally, a rare Rolex sold for top dollar at an auction in Monaco. Get this, a record $3.5 million.
Sweeney has
Yes, he's got it on his wrist now. It's one of just 12 ever made and 9 known to exist. Very rare. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. The Rolex thing, I mean, I don't get it.
Nah, that value proposition wasn't there for me, so I got a Omega.
I got a Swatch.
Years ago, back in the day.
It's like a Swatch. It's
I
like,
do. Rolexes are nice, but I just never saw the value.
Yeah, I mean, that's where we are. Right now, the value is in keeping our discussion going on a Monday morning. Paul and I led with the oddity of the moment. Folks are trying to help you with where you are in investment, but just also in a well-being of where's the economy. To have Bob Michele of J.P. Morgan with us, Liz Young with us from SoFi out in the West Coast. And now we go 6,000 miles east of London. Patrick Armstrong joins us now at Clarimi. Hugely popular. When he writes in the FT, the world stops. Patrick, if you were writing in the FT this morning, what would you say?
I think it's time for investors to hold their nerve. We've got a backdrop that's going to be very supportive for earnings of equities. U.S. economy is ticking along. It's still fully employed. There's still 1.4 vacancies for every unemployed person. And anything that happens like on Friday, it's a bit of a hit to your confidence. You get rid of some basically money that's trading. But I think investors are going to be well placed to stick with the great companies that are still generating huge revenue growth, huge earnings, and have really defendable profit margins. So we're sticking with the ones we do.
Well, you're saying sticking with winners. Okay, UBS just making the headlines today with a move from Biden neutral on the wonder children of the moment. I mean, that seems to be the tone out there, a reassessment of tech. How do you reassess at this moment their free cash flow growth?
Well, that's exactly what I did all weekend, because anytime the market tells you something, you've got to listen. Doesn't mean the market's right, but you can't just be stubborn and say I'm right. So I did look at the companies, and we still got to wait a month for NVIDIA's earnings, but everything tells me those earnings are going to be strong. Some of the companies that haven't been strong, like ASML, they've really deferred a lot of their revenue growth. They're impacted a lot more by China. I actually think NVIDIA's numbers next month still look very good. If you look at the S&P 500, it's growing, but NVIDIA, Apple, Meta, Amazon, these companies are growing well above 20%. So none of them trade above 30 times earnings anymore on a blended 12-month forward basis. So they're not cheap. They're all above 20 to the 29 level, but none of them are ridiculous. And I still think they represent good value. You want to be owning them, adding to them if you don't have them.
Yeah. Well, I mean, Paul, what Patrick really did this weekend was notice that Aston Villa is 6 points ahead of the Tots.
Oh.
I mean, Tottenham is it's just painful to say the least.
I'm a United fan, so Aston Villa is even further ahead of United.
Yeah, I mean, United, they need to blow up the team. It's exciting. I mean, you got Arsenal and Liverpool and Man City. It's like it's like what any sport would dream of.
Yep, the big names at the top. Patrick, we have about a 5% pullback, or as the kids call it, a drawdown in the S&P 500. What does that 5% pullback mean to you? Is that a bump in the road, a healthy move in an otherwise bull market? How do you kind of view this little pullback?
I'm old enough that I don't get worried about a 5% move. So basically, since October, you haven't had many down days. All of them have happened over the last 6 down days in a row, basically, and that's the biggest pullback we've had. But it's healthy to do. I think markets have really run. The winners have gone up an incredible amount. As I said, I still think there's further upside in them. But it's not the move that people are really reassessing something fundamental even. What led to the sell-off doesn't seem to be specific to the tech companies, that you didn't get guidance with an earnings date on super microcomputers. That seemed to spook people, but it may be a lot of overbought names. You talked about UBS downgrading these names to neutral. Neutral's still a big weight in these companies as well, because they are such a big part of the index.
How about on the fixed income side, Patrick? What's your call there? I mean, a lot of folks are saying, boy, I can sit in the 2-year U.S. Treasury and get darn near 5% here. Is that the play, or do we take some credit risk
here? Well, I don't like the Treasury. I think there's nothing wrong with the 2-year Treasury, because I do think the Fed's not going to be cutting, even with the new pricing, as much as the market's still indicating. Economic strength, I think, continues throughout the summer. Inflation, I think, is going to remain persistent and stubborn. And that's going to lead to pretty reasonable yields on 2 years. But I prefer short duration bank bonds. I just don't think there's any risk in a high quality bank in the short term, and you get a little bit of a yield pickup. And longer duration, tips. I think a real yield of 2.1% over the next decade, whatever that inflation comes out at, you're growing in real terms with that tip right now. So those are the two parts of fixed income I like.
Patrick, with great respect for your international sense and the responsibility of United Kingdom money, do you believe in American exceptionalism? I was reading Le Monde in English this day. I'm looking at the Olympics and all
Not
that.
French?
Katie Greifeld has me looking at the Olympics. No, I look in French, but trust me, it's like Greek. It's like Bob Michael's Greek. So I'm looking at Le Monde in English, and it's shocking how tech isn't part of the discussion in France. Patrick Armstrong, do you believe in American exceptionalism?
I do, yeah. We've been talking about the big cap tech. They're all American. That's where American exceptionalism is really clear. If you want to be in big cap tech, those are American companies. In Europe, we do have ASML, but the big cap techs are in America. You've got capitalism really employed, whereas in Europe, innovation is stifled somewhat by regulations and just culture. I think those aspects do create what you refer to as American exceptionalism. I think it is real.
All right, given that American exceptionalism, what are we going to see from the Bank of England, from the European Central Bank? Are they going to be a little bit more aggressive than the Fed in terms of cutting rates?
They have to be. I don't think they necessarily want to be. The ECB is going to be cutting in June because the growth backdrop isn't as strong. A weak euro probably suits Europe at this point. Bank of England, I'm not sure they cut in June, but I think they probably will. So you will have a divergence across central banks. I do think the Fed remains on hold in June and maybe throughout the summer as well, because in the election year, there's going to be government spending. The consumer is still consuming. It's hard for me to see that recession that everyone's been waiting for coming around the corner. And just look at the Taylor rule. It says the Fed's where it should be. So I think in Europe, you do get the cuts. Probably not from the Fed.
Second time we've heard that on the Taylor rule. Do you have, I mean, it's not your act, but Patrick Armstrong, do you have an SPX target, Standard & Poor's 500 target out a year, 2 years?
I think we'll be up around 5,300 by the time we get to the end of the year. So I think that's a pretty reasonable gain. It's not going to make you rich, but I do think that's a better position to be than bonds, given where real yields are.
Patrick Armstrong, thank you so much with Parimi there. For those long the market, Paul, I think it's understated how much of America, how much of retail is long these stocks where Wall Street has a, not skepticism, but just a pause in mind.
Yeah, and again, we saw that kind of a 5% pullback in the S&P 500. I don't sense any panic out there. You know, you take a look at the volume on some of those down days. It wasn't extraordinary, and so we look at the futures here, starting the week up about 0.6% on the S&P 500.
So you're 42 years old. And you've done it all, like including being married to Greg Allman. I mean, just for beginners.
Yep.
Great songwriter, of course, with the Allman Brothers. You're 42, and you put out a song which I would suggest completely changed female pop music. Like you think of Dua Lipa today. Mm-hmm. Okay, Lisa, you think of, like what The Rock listens to, stuff out in L.A. Cher invented it. And I have the clearest memory of I remember Satisfaction and Sonny and Cher and all that. And then there was another iteration and another. And then she just finally said, okay, let's do it. This was done on ancient technology. Cher, Believe, Rock and Roll Hall of Fame, Cleveland.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
They're having my outcome, my volume of Tang.
Let me see.
They're having my Tang. That's what they're doing. They're having it. What a guy! You explained this before. Having a Bitcoin, they're making less of it.
Going forward, when you mine Bitcoin, the amount of Bitcoin that will be created, and trust me, people, I have no idea what I'm talking about, but I just repeat what Mike McClone says. You're going to get half the supply that you got in the past. So that is a reduced incremental supply. So that's it.
So it's up 2.2%, 66,000 on Bitcoin, up $1,400. What a way to start the year.
We need Greifeld.
You know, I was like sort of upset, like 6:45. I'm like, well, it's going to be a boring day, but the conversations have been outstanding.
Yeah.
I mean, really varied, and folks really resetting this week about where are we going into the Fed meeting and on from there. Good morning to all of you. Just can't say enough about the discussion this morning. As Paul mentions, inflation data at the end of the week. I'm looking at this GDP mystery that we're going to see. We say good morning, Apple CarPlay, Android Play as well. Download the Bloomberg Business app wherever you are. It's free. There's no cost to get on a safer, better Apple CarPlay. On YouTube, search Bloomberg Podcast. It's growing every day, nationally, internationally as well. YouTube is just like booming. I mean, in the last 10 days, some of the articles, including Mark Thompson over at CNN, over the mystery of just YouTube.
It's been a great business for Google. The advertising that they're bringing in is just extraordinary.
Shout out to Chad Hurley, Indiana University, Pennsylvania, who invented YouTube and has been working on that, of course, from a distance with Google as well. So, we'll have to see where it goes. A lot of good conversation to start. Please stay with us with our Bloomberg Business Flash in New York, Lisa Mateo.
And we've got green on the screen as the focus starts to shift from the Middle East tension to company earnings, economic data. Let's get to the earnings part first. Okay, so more than half of the Magnificent Seven companies, including Microsoft, Meta, Alphabet, they'll be reporting this week. And speaking of big tech, UBS cut its view of the big six tech stocks to neutral from overweight. Check in with them now. We have Apple and Alphabet up 0.5%, Meta up more than 1%, Microsoft up just 0.1%, Nvidia, though, up 1%. This is after it shed nearly $212 billion of its market capitalization in Friday's tech sell-off. Now the economic data side of things in the U.S. this week. U.S. GDP, wholesale inventories, initial jobless claims, and can't forget that read on personal income and personal spending. The 2-year yield at 4.97%, that's down a basis point. The 10-year yield at 4.64%, and that's up a basis point. And to commodities, we have oil and gold both falling. Spot gold lower at $2,338 an ounce, and Brent crude $86 a barrel. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. We just had a wonderful set of eclectic guests this morning on bonds, on stocks, sort of looking at what do you do with the quality stocks. Now let's go to where you were this weekend at the kitchen table, where you're trying to figure out what to do. In my case, with the 201k, Sweeney has a 501k because he loaded the boat on NVIDIA years ago. But Brent Schutte joins now with Northwestern Mutual. He's chief investment strategist. And what's great about Brent, besides he's planted out north of Chicago, but what's great about Brent Schutte is he's like thinking about this with short term being 3 years. Brent, good morning. What do you do now to prepare for a good outcome 3 years from now?
Well, I think you need to start moving towards things that are cheap. And so these aren't instant gratification type trades. But I think the first thing is to stay diversified, not to chase the 501k that Paul has and put it all in NVIDIA, but to make sure that you own a broad swath of stocks across the board, which are cheap relative to the S&P 500, which is more concentrated in 10 names that make up 34%. And so to me, I still like things like small, mid cap, and even equal weighted S&P 500, because I think the market has traded off of expectations for recession, has bid up those high quality names. And I think on the opposite side of this, you want to own some of those other things that I think will do much better coming out of what I still think will be a likely mild recession.
And way beneath the radar, Paul, I'm editorializing here, but I believe when I look at all the people we read, there is a broadening of the market. I think I can make that as a statement.
Yeah, just looking, it's interesting here because a lot of folks, and Brent, are saying we do need to see a broadening of participation for the overall health of the market. Are we seeing that now?
I think just a bit. I mean, look, there's optionality here. If the economy doesn't fall into a recession, as you mentioned, I think the market will have to broaden out because the economy will have to broaden out, which isn't happening right now. Actually, you're seeing more of a story of the have and the have-nots, which we can hit on hopefully in a second. But the other side of this is that rates will eventually fall if there is a recession. And you'll have an opposite side of this where I think those types of names will do much better on the opposite side. And I heard a prior guest talking about this being more like 1995. Unfortunately, I think it's more like 1999, 2000, where you did have a mild and shallow recession, with the opposite side where things like the equal weight, the small caps, the mid cap did much better on that side. And I think that's more today like it is in 2000, not 1995.
906 Wall Street Times. Savita Subramanian, she slides in like at 8:15. Savita over at Bank of America, 6% earnings beat so far, a 3% earnings beat, ex the financials. And here for me is the key line and what to watch. 1% sales beat. This is with 21% of index earnings. That from Bank of America.
That's good stuff. All right, Brent. I mean, I'm game to look for value. I mean, I missed out on the Magnificent Seven. Tom, he backed up the bus, of course, to the Magnificent Seven, but I did not. Where do I find value today?
I mean, I mentioned a lot of those names. I think the bond market actually has value too. Look, to me, inflation is not coming down, and I think people are finally waking up to that. A lot of this rally has been built upon a belief by consumers, a belief by corporations, by CEOs that rates were headed lower, stoked by a Fed who seemingly pivoted. I think what you're seeing is that inflation is the fly in the ointment. It's moving in the opposite direction, not lower, but higher. And that's where I think it's odd that I also like bonds. But I think you'll look back in a not too distant future and think, why didn't I buy, the Barclays aggregate, Bloomberg aggregate, at 5.25, which to me still gives me, a good yield while I wait. Plus, I think on the opposite side of this, you will have the Fed that will be able to cut to kind of help stem the recession, and that's where I think bonds have some value in the near term.
So, do I stick with investment grade, or do I go out and maybe take some more credit risk? Because I think about the bond performance in 2023, surprisingly, investment grade was the place to be.
Look, I think investment grade is the place to be now, not go out on the risk spectrum. I think that's because I do think there's going to be a recession. I think spreads are still too tight. I think people are still thinking soft landing, and I just don't see that occurring. I don't know how the Fed exactly lands the economy where supply and demand equal each other. I think you're later in an economic cycle. We're running out of workers to hire. Wages are still too hot, and inflation is moving higher, not lower. And so in this environment, I still find the Fed erring on the side of waiting around too long. And I think the longer rates remain higher, the more they work their way into the economy, which has not happened yet because a large swath of the economy, especially wealthy people, have been interest rate insensitive. You've seen the lower end. Look at last week's existing home sales. The $0 to $500,000 home sales are basically plummeting, while you've seen increasing at the 1 million and above because wealthy people have actually benefited from rate hikes. Right. I think eventually you'll see a more broadening out of interest rate impact on the economy, which will bring down GDP growth and eventually cause that mild recession we still see.
I got like 10 more minutes of questions for Brent Schutte. Really important stuff there.
I'm not busy.
No, Brent, I got to go. Lord Barr just walked in the studio and he's looking at me like, let's go. But Brent, I can't say enough about the perspective and that, Paul, that wisdom there on what we're seeing of this disaggregation of benefit and loss from high interest rates.
Yep.
Huge, huge deal. Brent, brilliant. Thank you so much with Northwestern Mutual. Greatly appreciate that this morning. Futures advance. It's a Sweeney rally. We were up 22. We're now up 29. I saw 30 print up 0.6%. Dow futures up 211. And the VIX comes in sprightly, 18.14, 17 handle in the VIX. Will be a lot different than the Thursday, Friday damage that we saw. That was when Barr was on his sabbatical.
Yeah, where were we? I don't know. Paris, it's like, Rome. I don't know where he was.
I don't know. It's like a 3-week thing he takes.
Wyndham Creek Casino.
There we go. And let me tell you, Mrs. Barr. Thank God they could pay the bill because Mrs. Barr won so much there in the slots. With our news from Wyndham Creek, here is Michael Black.
Thank you very much, Tom, Paul, Lisa. Opening statements in Donald Trump's historic hush money trial are set to begin this morning. Trump is accused of falsifying internal business records as part of an alleged scheme to bury stories he thought might hurt his presidential campaign in 2016. Loyola Law School professor Jessica Levinson.
For the prosecution, the key will be to give the jury a roadmap explaining where they're going to go in this case and explaining why, frankly, it's winnable and, in their view, why it's not overly complex.
Loyola Law School professor Jessica Levinson. It's the first of Trump's 4 indictments to go to the trial and the first criminal trial against a former president. The Supreme Court will hear oral arguments this morning in a case that has pitted local officials of Grants Pass, Oregon, against the area's homeless population. City leaders started issuing a fine of $295 for sleeping outside, leaving homeless community members with nowhere to go because there are no public shelters. Critics of the measure say the actions do not do anything else except criminalize the vulnerable homeless population who have no other place to go. David Giffen is the executive director of the Coalition for the Homeless.
Criminalizing the victims of our failed housing policy is morally wrong, and it's unconstitutional. And that's essentially what the city of Grants Pass has done by making it illegal for someone to exist while being homeless.
David Giffen, executive director of the Coalition for the Homeless. On this Earth Day, 2 top climate monitoring organizations are reporting that Europe is the fastest warming continent, and its temperatures are rising at roughly twice the global average. The UN's World Meteorological Organization and the European Union's Climate Agency are also warning of the consequences for human health, glacier melt, and economic activity. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
I'm lost and confused. I'm going to get some wisdom here from Sweeney and Barr right now. The play-in in the NBA is hugely popular. I mean, it got some solid ratings.
It's that old argument. The more teams you have involved, the more, I guess, people will be into it. But does it cheapen kind of the regular season by not giving more value to the teams?
I have to say I'm sorry, I have to say the latter, and it's not against any teams. If you're in the playoff, good for you, and that's it, and whatever. But we used to have a structure, and that's the same way it is in baseball. It used to be a structure. In baseball, it's like the regular season meant something. You had to have a great record to make it to win the pennant. And now it's totally different.
This from John Lewis, Sports Media Watch. The last sentence in his report, the play-in game tripled the rating of the non-sports programming they were having. I mean, the answer is, Paul, this nirvana we're in, and it's in New York City, folks, with the Knicks and the Rangers, so we're biased, but this nirvana of Boston Leafs or whatever's going on, Sixers, Knicks, that's the only story they have left. John Lewis is telling me sports that's all there is.
And it's on linear television today. That is broadcast and cable, but it is going digital like everything else at some point. You'll see Amazon, you'll see Google, you'll see Apple, big time in sports in the future, I think.
Well, we're going to have to see. Futures up 30. From New York, this is Bloomberg Surveillance.
Now look at some local.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are advancing. The focus shifting from earnings from geopolitical tensions. S&P futures right now, they're up 0.6%, and that's after the gauge recorded its worst week since March of 2023. We have Dow futures, they're up 0.6% as well. NASDAQ futures up 0.7%. The 2-year yield at 4.97%, that's down 1 basis point. The 10-year yield at 4.63%, and that's up 1 basis point. To commodities, gold lower, spot gold at lower at $2,340 an ounce, and we have Brent crude at $86 a barrel. Companies making news: software giant Salesforce, they're up 3%. The Wall Street Journal, Reuters reporting it has backed out of negotiations to acquire Informatica. Informatica shares, they are down more than 6%. Tesla, they're down more than 4%, and this is ahead of its earnings report tomorrow after cutting model prices over the weekend across China and Europe, as well as its driver assistance software in the U.S. And finally, Kroger and Albertsons, well, they've agreed to divest more stores to C&S Wholesale Grocers to make their merger more appealing to antitrust authorities. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. I appreciate it this morning here with a continued lift to the market. I guess we guessed this right, Paul. I'm moaning about nominal GDP and stronger dollar, and I'm sorry. I'm looking at the pulse of New York City, and I think we've really turned from some of the pandemic gloom. And, let's go negative here. Yep. CRE, world's coming to an end.
Yep.
Red Sox, they're okay, but the world's going to come to an end. But I'm sorry, I'm optimistic. I mean, that's all there is to it. What do you, futures up 30.
I'm looking, Lisa was just talking about Tesla, down 4.5% pre-market. The stock's down 40% year to date. Tesla's price cuts in China could cost the car maker the entirety of its operating profit in the world's biggest electric vehicle market. That's according to Evercore ISI out in a new report.
We're going to get Damian Sassar in today, but he's working like a one-day week.
Yeah, it's golf season. Yeah, exactly.
That's all there is to it. Tim Ash is iconic. He was at Bear Stearns a million years ago, and you hated him because he put out a 12-page special, and you'd be like, "Damn, I got to read this." He's now at Blue Bay. He's had his sterling career, RBS and Bear Stearns and all that. And he's now at Blue Bay Asset Management on EM. Tim, I want to take a broader spectrum here, which is the reality is dollar resiliency. Yuan goes 723 to 724. Even Mexican peso backs up. I got the Turkish lira is its own story. But there's, to me, like off IMF, off of what the Fed's doing, there's something stewing out there in your world of EM. Do you feel the same way?
Well, I think when we think of EM, we often think of broad brushes, right? Big themes. And I think when I look at the emerging markets now, I think of lots of individual stories adding up that provides quite a lot more resilience than in the past. Lots of individual country stories. You mentioned Turkey. There's also Argentina. A lot of people talk about geopolitics, right? And think, very negatively, Middle East concerns, etc. But people often forget there are some winners as well from those scenarios. Egypt has been a big one recently, huge bailout from the UAE, IMF soft pedaling when it comes to Egypt. They had lots of problems, but people were talking about debt restructuring scenarios with Egypt, and that's no longer the case. Pakistan also, a bailout, they got through elections.
Right.
And if I think, on the rate story, I think a lot of countries, rates and FX, a lot of these countries raised rates initially very aggressively. That's killed a lot of inflation. Right. They've been cutting rates. There is pressure, obviously, on the currency, obviously, as you mentioned, with the dollar. But, sorry, go.
Well, Tim Ash, this is important. It's a question I asked last week, and I got baloney answers. You never get a baloney answer from Tim Ash. When you say Egypt got a bailout from the IMF, is that just a bailout from the United States of America?
Well, Egypt, is a national security priority now for the region, right? It wasn't just the U.S. bailing. The big money was provided by the Gulf, right? UAE writing big checks for a tourism development. I think a lot of those countries in the region, they understand what's going on in Gaza, obviously with Israel and Iran. Egypt is a huge country with a big Arab street. they don't want instability in Egypt in this time. And actually, it's not really the IMF. The IMF money is relatively small change. The big money is coming from the Gulf. And, new times. I mean, the IMF is now not the big player in many of these EM stories. If you think of, China, the money it's been throwing around, the Gulf guys throwing huge amounts of money around as well, providing stabilizing factors and forces for countries in the region. They're the new kick in town, actually, and they're helping EM ride through some difficult times, I think.
Tim, what's the call on China? What's your call on China these days? I mean, I've heard anything from it's uninvestable to you can't avoid it. How should we think about it?
It's pretty complicated, right? I mean, I think it's an interesting one. I mean, I think there was a view maybe 5 years ago that China was inevitably, maybe 10 years ago, that China was inevitably going to get hegemony over the US, right? It had huge balance sheet, lots of money to deploy. The kind of centrally planning kind of model meant that what policymakers wanted happened. These Chinese guys were really clever. They deployed big bazookas when they needed to. Actually, I think now, interestingly, the trade wars that, were, I guess, the onset of that was the Trump presidency and carried on by Biden. We've seen, the Chinese begin to make policy mistakes. We look at the real estate sector. We can look at, I think one of the factors there is the overconcentration of power around Xi himself. And Xi himself, I think is not, doesn't get an A-star rating in terms of the economy. He's making mistakes. And, also I think the Chinese are looking at the war in Ukraine, Russia's policy response there, build-up of buffers by Russia, deleveraging, big FX reserve buffers. And they're doing the same. There's like a fortress China economic policy setting, which means that in the old days, when there was global instability, the Chinese deployed big bazookas to keep growth going. And now they're not. They're very defensive. Right. They're very cautious, and they're prone to mistake. And that gives the West hope, I think, gives the US hope that this economic hegemony is not inevitable for China.
Tim, do you believe we underestimate China's resiliency if we get policy change from Beijing?
Well, I think in the past we did, right? Again, this idea that there was these huge buffers and the Chinese were so clever and all this kind of gig. I think that's no longer the case, right? I mean, a lot of focus on Taiwan, et cetera, and concern about, a Chinese intervention there. I think that's unlikely, given what Xi has seen from Russia's intervention in Ukraine. But the risk there is, I think, if Xi screws up on the economy front, which is quite possible, that he decides to go for a foreign policy adventure. So, and that could be Taiwan further down the line. So, China's a pretty complicated story right now. As I said, it's not a done deal that the US is inevitably going to force behind to a second place to China. The trade wars, I think, the globalization trend that helped China into this position that it seemed inevitable that it would get hegemony, I think it's a diminishing story. And again, this is going back to this idea that the Chinese are beginning to make policy mistakes.
Tim Ash, thank you so much. Emerging markets strategist of Blue Bay. Just iconic here and looking at the entire spectrum. I go back to Christian Malik, Paul Sweeney, who we had on oil from JP Morgan on Friday from London. And the basic idea of, do you want to bet against a Pacific Rim? Anybody who's done that since you and I got our first gray hair has lost money. Do I want to bet against Sing Dollar in Singapore? Do I want to bet against, even some of the frontier economies there like Vietnam? I really have trouble with that idea.
Yeah, you just think about the structural growth that we've seen in that part of the world, and that along with maybe India, a lot or where some of the emerging markets, a lot of folks say you really have to have exposure, despite a lot of the political risk coming out of China.
We're on Apple CarPlay and Android Play as well. Download the Bloomberg Business app. It's free. Apple CarPlay is free. It's building every day, 20 nations worldwide, besides Apple CarPlay across America. On YouTube, Paul and I are just flat out humbled by the growth. Search Bloomberg Podcasts and look for Lisa Mateo. It's as easy as I can make it. It's Bloomberg Surveillance. Good morning.
And Bloomberg Surveillance brought to you by Riverwalk Independent Living at River Spring Living.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. Now, we have a bit of a shift in the focus on Wall Street from geopolitical tension to earnings, economic data. Now, this week, we also get results from big tech giants, Microsoft, Meta, Alphabet. Investors are going to be looking what they have to say about AI. Let's see how things are shaping up on a Monday on Wall Street. We have the S&P 500 right now up 0.5%, and this is after the gauge reported its worst week since March of 2023. The Dow up 0.5% as well, and we get to the Nasdaq right now kicking in up 0.7%. Over to the 2-year yield at 4.98%. That's down 1 basis point. The 10-year yield at 4.64%, and that's up about 2 basis points. To commodities we go. We have spot gold lower at $2,337 an ounce, and Brent crude at $85 a barrel. And then at the open, I want to check in with the big tech giants that are reporting this week. We have Microsoft. They're up about 0.2%. Meta up more than 1%. And we have Alphabet to Google at up 0.3%. That is your Bloomberg opening bell report. Paul and Tom.
Thanks so much. Appreciate that. Lisa Mateo with a lift to the market after the massive drawdown that we saw yesterday. I mean, no other way to put that. I'm looking through the UBS note rather, and I don't have the actual full note in front of me, but they're looking at part of it's John Golub and all his great work there, but they're sort of looking at like a pause on tech, and we've had some people, Paul, really push against. Do you hold what you have? Do you lighten up?
Right.
Do you, or how many people do we hear right now saying acquire and add more to tech? I'd say that's a pretty lonely group.
Yeah, I mean, buy on the weakness for some people, but again, you look at, is it a Magnificent 7, 5, 4? I mean, Apple has not, participated. Tesla certainly.
Yeah, people make
a
that
rough patch
split
here, down at more than 40% here a year to date. So you have to really be careful here. But I think I can't imagine, just thinking about the last 15 years or so, this market moving appreciably higher without tech being a big part of it.
Tesla is through 140.
Yep.
I was at 390. I acquired. I bought like 3 shares.
Okay, good.
Yeah, I didn't want to get outside the bound of the triple leveraged all cash fund, but basically 400 to 140. And I don't hear enough discussion of what it means for the company, the optionality that Mr. Musk and his team have in terms of issuance of this or issuance of that.
I
heard
don't
enough on that.
I don't know. And I mean, you think about some of these big holders like Cathie Wood in her ARK funds, and historically she has bought on the weakness and bought very publicly. But we're at a 52-week low here today, 139.50, down 44% year to date. And now down, even over the past 12 months, down about 15%.
I'm looking at the ARK Innovation Fund, folks, and let me just bring up the basic chart here. We interviewed Cathie Wood in London, and it was a spirited discussion, but you had the ARK moonshot of pandemic 5 years ago. I can take it back further than that in the Bloomberg, but down you go to 42, 48, and it's 1, 2. This is now the third rollover for ARK, basically moving 50 to 42. Don't want to make too big a deal about it. It is not broken through long-term support, but nevertheless, where are you? Let's look at this right now in terms of where are you with exchange-traded funds. We're thrilled to devote the next 30 minutes to what everybody's doing today. Joining us right now, Joanne Bianco with Bond Blocks Investment Management. Joanne, I think our audience has a real understanding of equities and the madness over Bitcoin and all that. How popular are ETFs for people that want to clip a coupon or look for total return?
They have really grown in popularity. And that's, actually the reason that, my company is in existence, because we want to be able to give investors more choice in fixed income, just like they've had in equities for so many years.
Okay, but you're going to give them choice. Like what choice? Is it just a simple duration call, or can you do an ETF with a barbell or an ETF with a laddered maturity?
Yeah, you can do any and all of those things. We have 22 ETFs out in the market now, spanning U.S. Treasuries, and we break those down by, we have 8 target duration U.S. Treasury funds, so spanning from 6 months out to 20 years. And so investors can, decide what they want to do in terms of their duration exposure. And then we also have high yield funds. We are the only firm to break the high yield market down by industry sector. There's 7 industry sectors. Also, we have 3 credit rating categories: BB, single B, triple C.
I mean, Paul, this is like Bramo. I mean, you can go into like a hydrocarbon high yield and buy the oil patch with a huge coupon.
Hey, Joanne, I was kind of surprised that in 2023, the best performing fixed income category was U.S. high yield. Are you seeing flows into your high yield ETFs?
We definitely have. We've seen flows into our credit quality funds. We've also seen flows into our industry sector funds. We also have a fund that is a sector rotation fund that that picks our 7 sectors that we work with a sub-advisor, Macquarie, to manage with us. So yes, we've definitely seen growing popularity. And, even in you would think that people would be a little bit more shy about the CCC fund, but, it started last year at the beginning of 2023. It had a yield to worst of over 15%. It's still around 12.5%. And, we're in a market environment where even CCC credit has held up. So it's been a good investment for investors.
How about investment grade here? Because I think, we've seen a lot of issuance in investment grade this year. How are the funds flowing there for you guys?
Well, we just more recently launched some BBB funds, and we break down the BBB market by maturity buckets. So there's a 1 to 5 year, a 5 to 10 year, and a 10 plus year. So we think BBBs are the best part of the investment grade market. They have the higher coupon income, better long-term total return potential, and that's where we're expecting to see a lot of flows.
So, Joanne, I'm a big fan of the municipal bond market. I think I'm one of the biggest creditors to the state of New Jersey. How is it in the ETF space? How do your investors think about that?
That's also a growing area in ETFs, and we have an offering there that we launched recently with a very experienced manager, IR&M, that does a lot in terms of tax-aware strategies. So it's not just municipals. It's also, it's looking at investment ideas that help you have more after-tax income. So those could be corporates. Those could be other areas of fixed income. It does this opportunistically.
Joanne, thank you so much. Joanne Bianco with us with Bond Blocks this morning, Bond Blocks Investment Management. I remember, Paul, I was invited, and I believe it was Barclays was the victim. I was invited to an ETF meeting. No one knew what ETF meant.
No.
It was like, fancy, and they were rolling it out. It was like the first of its kind or second, third, whatever. And I raised my hand and I said, what do you do if there's no liquidity? And I never imagined when I asked that snarky question in that meeting a lifetime ago that basically, we have to talk to Eric Balchunas about this, but basically they're taking over the high ground for mutual funds.
Yeah, I mean, you and I both cut our teeth going up to Boston, seeing all the big mutual fund complexes up there, the Putnams, the Wellingtons, the Fidelities of the world. And now, when you take a look at where the funds are going, the fund flows are all towards, or the vast majority are to these ETFs for a variety of reasons, not the least of which is
400
much lower
flavors.
costs. Yeah, exactly. And they've sliced it and diced it. It's not just, the S&P 500. It's got, you can do everything. And I know you're into the double leverage Tesla. You're looking at that these days, but they have ETFs for just about every strategy out there.
They have a leveraged NVIDIA fund, right?
Yeah,
Do I recall that?
Both long and short. Like 2x.
You know, it's great. They got the triple leveraged Detroit Tiger Fund.
Oh yeah,
it is
all over it.
Right now, it's stock and flow. You're treading water right now with a triple leveraged Detroit Tiger Fund. May start soon. SPX up 60 points. Dow up 60 points. SPX up 18. The VIX 18.20. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Opening statements are set to begin soon in Donald Trump's criminal hush money trial. The former president arrived at the courthouse moments ago. The Manhattan District Attorney will try to convince 12 jurors beyond a reasonable doubt that Trump repeatedly falsified business records to unlawfully influence the 2016 presidential election. Loyola Law School professor Jessica Levinson.
I think the defense is going to focus on the fact that Michael Cohen, likely to be a star witness for the prosecution, has major credibility issues. The defense is also likely to focus on their allegation that the former president lacked intent to commit or conceal any crime.
National Enquirer publisher David Pecker, who was part of an alleged scheme to buy and bury unflattering stories about Trump, is among the early witnesses. $61 billion worth of U.S. aid will soon head to Ukraine. A grateful President Zelensky, through a translator, spoke on NBC's Meet the Press.
Now we have all the chance to stabilize the situation and to overtake the initiative.
Meet the Press can be heard Sundays on Bloomberg. Kremlin spokesman Dmitry Peskov calls the approval expected and predictable. Journalist Terry Anderson, who spent almost 7 years as a hostage in Lebanon in the 1980s and 90s, has died. The Associated Press correspondent became one of America's longest-held hostages after he was dragged from his car by Hezbollah. The AP reports he died at his home in Greenwood Lake, New York, at age 76. Finally, today is Earth Day. According to a new CBS poll, 2 out of 3 Americans think it's their personal responsibility to do something about climate change right now. Global news, 24 hours a day and whenever you want it, with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
My cup of coffee was in the way of the Detroit Lions.
You have a lot of cups over there. A lot going on.
I'm struggling.
You all right over there?
I got the Tang going, and you know, it's Tang Zero, folks. That's, we're like watching what we're doing here, but I was a little slow to the mark there on him. It's like what a Monday's about.
Sure.
Like
no need to rush. No need to rush.
But we're rushing into the Fed meeting, and basically, every time somebody says it's a snooze fest, all my radar goes up.
Yep.
And I really wonder what the press conference is going to be like now. What does he do with 5% nominal GDP?
May 1st at 2 p.m. Wall Street time, we'll send Michael McKee down there to ambush the Fed chairman in the press conference. But I think that if this Fed is in fact data dependent, boy, the data's coming in probably a little bit hotter on the inflation side than they care to admit. So maybe that means higher for longer. That seems to be what's being baked into this marketplace.
There's a lot of different opinions, and I'm not going to mince words. On live chat out on YouTube, I'm sorry, people really push back against the optimism we've heard from a number of guests this morning. They're just saying, look, the GDP's not there where they live. And, it's okay, but it's not the boom economy that pros are talking about.
I think you're right. I think it's regional. And it just means we have to pay attention more maybe to what we're going to see, what we're hearing from companies this week, because it is a big earnings week. Let's see what the guidance looks like.
Did Balchunas, is he here yet?
He badged in. We have confirmed that the Acela did make it. I'm sure
Acela did make it?
Yep, Acela made it in. So we'll see if he makes it up here to the 6th floor.
All of you really want to stay with us for this. I mean, we've had a great set of guests today. Eric Balchunas, when he's at a conference, there's like a conference, and then he gets up, and it just stops.
Right.
People don't understand the weight.
Go-to voice on ETFs.
And really looking forward to this ETFs into the remainder of 2024. And yes, I promise we'll do halving in Bitcoin with Eric Balchunas. Dow up 41 points. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen as the focus kind of shifts to earnings from geopolitical tensions. Right now, we have the Nasdaq up 0.7%, S&P 500 up 0.4%, the Dow up 0.1%. Over to the two-year yield at 4.97%. That's down a basis point. The 10-year yield at 4.64%, and that's up a basis point. To commodities, spot gold lower at $2,339 an ounce, and we have Brent crude at $85 a barrel. To earnings we go. We'll check in with Verizon. They're down about 0.1%. Beat analyst estimates for profit, boosting wireless service revenue, even as it lost more retail phone customers than it expected. Companies making news. We have software giant Salesforce. They're up 2%. The Wall Street Journal, Reuters reporting it backed out of negotiations to acquire Informatica. Right now, we'll check in with Informatica, and they're down 10%. Tencent, that's where we want to go to next. Those ADRs of Tencent, they're up 4% after it set an earlier than anticipated debut for Nexon's Dungeon and Fighter mobile game in China. Gamers like that. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Two-year yield, 4.97%. As Paul mentioned earlier, oil quiescent, 86.47. The Sweeney tickets, two people, $500. I mean, they're pretty good. It's like, he's not like you're going to see him on TV at the court, but he's right behind all those animals. Balchunas, on the other hand, is in row AA, seat VIP 12. For two people, Paul, this is before the fee, $42,000.
All right.
Nick Sixers is never $42,000 to sit with the large people.
Yes. Well, he's in. That's how he rolls.
Joining us now for a brief in the Philadelphia 76ers, Eric Balchunas. How revved up is Philadelphia?
Oh, we're revved up. We enjoyed the, I had my first beer moment when the New York Knicks fan, just going up 1-0 in a best of seven, were like burning Embiid's jersey, all these chants. They acted like they won this championship. That was fun. It should be interesting in Philly. We like to return the favor.
Yes.
What's the single thing that can allow the Sixers to do better than the pundits say?
Play more Kyle Lowry, who is just an animal in the clutch, and play less Tobias Harris, who is Philly is just over this guy, but he's like just assumed he's a starter. He plays a lot. He just misses a lot of shots.
But it all comes down to Embiid.
It does.
He's a warrior.
And Embiid, I think against the Knicks, he'll show clutch genes. Sometimes Embiid has this thing with the Celtics. He just can't beat them in the end, but I think he'll do good against the Knicks.
We had to do this. The only reason Balchunas would show up if we talk Sixers basketball. So Eric Balchunas owns a high ground in ETFs. I want to make clear, folks, this is an earned high ground. He didn't do it with PR people. He didn't do it with social media. He did it with two books that are absolutely mint. The magic of John Bogle, and also, of course, this ETF boom that's there. I got to go to the event over the weekend, a manipulated halving of the supply of Bitcoin. Up today, last time I looked up $1,400, 66,000. What does that mean for the cajillion dollars in Bitcoin ETFs?
Yeah, right now it's a little bit of a holding pattern. The flows have been, a little bit, a couple outflows here, a couple inflows there, but that second wave I spoke of the past couple weeks has definitely died down. We'll see if we get a third wave. So right now we're holding at about net $12.5 billion since they launched, which to me, if that's all they get this whole year, that's a success. That's how big that number is. But we'll see what happens. I think that the prices holding pattern is interestingly intertwined with the flows holding pattern. Maybe one of them is waiting to go up, but they tend to be in a spiral together for now. I think the ETFs are one of the biggest catalysts. There's definitely algos trading off of the ETF flows, so there's almost like an amplification effect. So we'll see what happens with the ETF flows this week. One good news, though, is GBTC's outflows continue to get lower. So they're now in the double digits.
That's the grayscale?
Yeah, the grayscale Bitcoin Trust that converted with $28 billion. It's now down to, I think, $20 billion, but has seen $16 billion of outflows. That's been a weight on this, but the $12.5 billion is net of those outflows. But GBTC seeing less and less is a good sign, but the 9 new ones have also seen less and less inflows. So we're kind of at this sort of, like I said, it's just sort of a breather. And that makes sense. ETF flows for something like that would be hot sauce like this tend to be somewhat correlated with price. But there's some catalysts coming up. I think a large chunk of advisors haven't even looked at this yet. They like to wait a couple months. The wirehouses, they're not really able to solicit them yet. So, and you got no options on them yet. That could come down the road. So there's some good optimistic catalysts, but of course, Bitcoin's price can do crazy things, and that's a huge variable.
Is BlackRock just going to own this space too?
Yeah, I mean, I just tweeted today, they've now seen 69 straight days of inflows. Basically, right out of the gate, flows every day. That's basically in the top 10 all time. And it's the most highest streak of any ETF by far that's active right now. So they're loving it. I mean, Larry Fink was on a different channel about 2 weeks ago, and he was grinning ear to ear like a proud father about IBIT. He's like, this is the greatest launch in ETF history. Now, keep in mind, BlackRock has 1,000 ETFs across the world. They've got a bunch of other businesses. He rarely brings up individual ETFs, and here he is talking about this one ticker, which, by the way, listen to this stat. Out of those 1,000 ETFs in the world, IBIT accounts for 24% of all their net flows this year.
Wow. Well, there's a generational thing going on here. Do you notice this, Paul? On the other side, Balchunas and Lisa, they're like incredibly cut and chiseled.
Yeah, exactly.
You and I can barely keep in this. Your perspective on the death of the mutual fund business. Paul and I live this, each in our own way. When do they roll up and go home?
Yeah, this is a very complicated...
It's complicated.
It's complicated. In most businesses, if you lose customers, you probably get acquired or you got a business. Like in a mall, if you sell candlesticks and the customer stops coming, it's over, right?
Right.
Maybe a month you have, and then you're out. The thing with mutual funds is you can lose customers and still make more money if the market goes up. So you got all these mutual funds that came into this last bull market, we'll call since 2008.
Yeah.
They had trillions of dollars. So even though they've seen trillions of outflows, the market's gone up, 3-4-fold? So the value of their portfolios is gigantic. So equity mutual funds, this stat will blow your mind. It makes my head hurt. Have seen $3 trillion of outflows in the past 10 years. Right? Makes sense, that's the story.
Yeah.
But their assets grew by $6 trillion.
Wow.
So
Just
they're
the
doing
market.
fine.
Yep.
But they're losing customers. It's a mirage asset. So, and they know this. So what I like to say is the writing's on the wall. They can see the writing on the wall. They know they're making as much money as ever, but they know the customers are leaving. So a lot of them are moving over to the ETF space to try to be where the customers are.
Are they successfully moving over to the ETF space?
Yes, but success means a little cannibalization, and some are more willing to do it than others.
Right.
JP Morgan's a great example. Got cheap quick and is having huge success. I think the more diversified a company is, like JP Morgan has so much going on.
They can do
Jamie
it.
Dimon
Right.
might not even be aware of what they're doing.
Right.
That those people hire an ETF person and they create a true ETF business. The tough ones are the mutual fund companies, like say a Federated, or MFS, where all they have is the mutual funds. It's harder for them to eat their own arm off.
Yeah, get one more in here, Paul.
So, I mean, where, other than the Bitcoin space, where are we seeing fund flows these days? We just had Joanne Bianco on from the bond blocks. They're seeing flows and going into high yield and so on and so forth. Where are you seeing kind of the flows these
let me
days?
give you a great example. So emerging markets. Emerging markets kind of been a little, off lately.
Yep.
But there's one ETF that's taken in 4 times the flows of any other, and it's a non-obvious one, EMXC. This is the iShares Emerging Markets ex China. This thing is now $13 billion. This is like I said, they grow up so fast sometimes. So if you have no China in your EM, your ETFs are flying off the shelves. If you have China in your EM ETF, you can't sell it.
Wow.
Thank you. This was great. And thank you for the 76ers brief.
Anytime.
I'm the rook. I don't, like Lisa and I were like, we don't know what we're talking about. Sweeney's.
Kyle Lowry. The more you see him, the higher our chances are.
Eric Balchunas, thank you so much. And the Philadelphia 76ers, they play a team in New York here tonight. Sweeney's gone. He'll be up 10 rows. I was at Apollo Global Management with John Farrow, and Matt Nord showed up. He's a senior officer there, and he's on the board of the Rock and Roll Hall of Fame.
Yeah.
And I said to him, okay, Cleveland, I get it. Putting Bob Seger in makes sense.
Yep.
But today we're celebrating Cher, Foreigner, Mary J. Blige, and I'm saying there's people that invented this, and they're in London, so we ignore them. Ginger Baker, Eric Clapton, Rick Grush, and Steve Winwood should be in the Rock and Roll Hall of Fame. Of course. Blind faith. They should be in Cleveland.
All right, coming up, Bloomberg Intelligence, we will drive this conversation forward. We're going to break down the earnings on the telecom front. Verizon put out some numbers. John Butler from Bloomberg Intelligence is going to join us to break down those results and think about all things